Mira Business FM, where business comes to talk.
This is Mira Business FM, and it is a day early to be talking to our oracle that is Jeff Rhodes, the man that knows everything. Online from Singapore. Jeff, good to have you back on the program. What are you doing there?
Business trip, Tim.
Oh, okay.
Can't say any more than that.
You can't say any more than that. If you told me any more, you'd have to shoot me, that kind of thing.
Kind of, yeah. Not really, but no business. Business as usual.
Good to hear. Jeff is MD for Business Development, Middle East and Asia at Monetary Metals. Jeff, again, for the last few weeks, I feel as though we have struggled to find a big story in gold a little bit. And this week, it's kind of more of the same, isn't it? Not a great deal going on.
Well, it is exactly more of the same, Tim. Look, it continues. It's not just in the gold market, but it's all the financial markets. We are in a holding pattern. We know the conflict that's going on at the moment is everyone's focus. And it doesn't matter whether it's foreign exchange or precious metals or equities, base metals, crude. All markets are on hold, waiting for hopefully a resolution.
Well, exactly. I mean, it really is all eyes on the hopes of a US-Iran peace deal. Signals are pretty mixed on that. If you listen to the president, it's one thing. If you listen to the vice president, it's another thing. If you listen to all the different sides, it's something else entirely. How would you characterize, Jeff, the last week in precious metals?
Well, I was watching the President Trump's kind of session with the press a couple of days ago outside the White House, and in the middle of a construction site. I thought I was back in Dubai actually, or in Ras Al Khaimah with all the banging going on. But even in that press conference, I ended up confused. I didn't know whether it was good or bad.
Right.
And I think during the whole watching, it was both. And that I think sums up the markets. And continue. Look, gold is trading volume is increasing a bit. It's not as low as it was. It is increasing. I think people are becoming used to the current situation and are beginning to trade because, of course, as traders, to make money, you have to trade. And so I think the period of time that we've had of very low trading volume is, I think, over. We're getting a little bit more activity, and we're poised to return to normal. And that's what I hope we'll do. I hope we get a successful, peaceful resolution to the current situation, and we're back to normal. So I remain very optimistic, and what I do believe is gold has done very well to hold on to current prices, because you would have thought, given the lack of anything really going on, that gold could have come under pressure, and indeed it did a bit. We got down to a 7-week low yesterday of 4,455.
Yeah.
But back above 4,500 this morning, around 4,550. So we're still in that trading range. As I say, just holding pattern, be patient. I think the markets would return to normal very quickly. Then we'll have a period of volatility and really high trading volumes. And you'll be asking me, well, when are we going to have a break from this? Because it tends to be feast or famine.
It really does.
It does. I mean, that's Yeah, that's the nature of all markets, but particularly gold. And that was really odd over the last week. We've had the London platinum and palladium market week, where the great and the good from the PGM markets gather in London, and typically that is a week of extreme price volatility.
Right.
We've had nothing. It's come and gone.
Yeah.
I expected to be talking about platinum or palladium much higher or much lower, but it hasn't happened. So, we'll have to think about something else to talk about. And we can't talk about football given the weekend that's coming up.
Oh, I know. I don't even want.
Big Sunday.
I don't
big
want to bring
Sunday,
that.
Tim.
Well, it actually, the upshot of this could be that Jeff Rhodes no longer appears on this program. I mean, the way it's going.
I've got a deal. I've got a deal for you.
Go on,
okay, the team that loses,
Uh-huh.
all right, then the other person pays for dinner. We'll have a dinner.
All right, then.
You and I will have a reconciliation dinner. If Spurs stay up, I'll pay. If
Okay.
West Ham stay up, you can pay.
Okay, I can handle that. Do you know what? My son is travelling down from Scotland for his first West Ham game, and he gets this game as his first game at the London Stadium as well. So, yeah, I mean, it's an occasion. I'll hold you to that, and I'm up for that.
Okay, it's called an Irish bet, by the way. You're betting on the other team.
Yes, it is, but I've never been this nervous. I really haven't. Jeff, I wanted to ask you something just about. I was reading your report yesterday, and was it yesterday or the day before? I think it was the day before. And the US Fed are going to avoid cutting rates this year. That's the perception from most economists. And you were quoting a Reuters poll. That's kind of what people tend to think. I had a look at the minutes from the Fed's April policy meeting, and all of this backs up your holding pattern theory because the committee's holding the rate steady, 3.5% to 3.75%. Here's the line. The minutes reflect the committee's commitment to supporting maximum employment, returning inflation to its 2% objective while monitoring the implications of incoming information for the economic outlook. So all of that means no change.
It does, Tim, and actually, when I think the Fed would love to cut rates, really, I would, because we are having a kind of Fed-friendly new boy in the chair as chairman of the Fed, who is the pick of Donald Trump, and although he will be an independent. Nevertheless, it makes sense to have, if you like, a rate cut friendly chairman alongside President Trump. And at the first opportunity they get, they will cut. It's just that we can't see it this year. However, the conflict in the Gulf and the surge in oil prices came very quickly, and it was really kind of surprising when it happened. You know what? It could change very quickly. And if we do have a peaceful resolution, the Straits of Hormuz will be opened and everything will be back to normal. And in the blink of an eye, you'll probably see crude prices back around the $70 to $80 a barrel. I'm not a crude trader, but I can see that everyone must be long. In this environment, very dangerous to be short crude, short the energy futures now. So if there is a peaceful resolution, this will see much, much lower oil prices, and it is only oil prices that's driving inflation. There's nothing else. Really is nothing else. It is energy costs. So if we flip that around very quickly, you could easily see gold resuming its rally. As I say, crude back around $70 or $80. Probably the US dollar under downward pressure, and we could easily see. Maybe we have to wait in Q4, but I could see in Q3, Q4, getting away from this, we're going to raise rates to we're going to lower rates. And at that point, gold resumes its upward rally that we saw in the first 2 months, and silver will be back in three figures.
Well, silver's up a few percent just this morning. At least it was when I looked 20 minutes ago.
Well, it could be down a few.
It could, yeah.
Now, honestly, the volatility in silver remains a sight to see. I personally like it. I like it when silver's volatile. As you know, I am a silver person. I like silver, always have done. And I think although we're seeing what we're seeing at the moment, and it's been probably gold has been in the same trading range for a month. But silver hasn't. Silver's been up to $90 and down to $70, and a lot of movement in between those two parameters. So I think, as I say, it's only a matter of time before we're back to normal. And back to normal means, for me, higher prices in precious metals.
I just remembered something from your report, and I wanted to make sure, and I nearly forgot to say this, but I enjoy your terminology of the day section, as you know. This is basically a glossary of kind of base precious metals terms and other related things, right? So A to Z. So we're back to A at the moment because you've kind of been through, and you're obviously revisiting. And I have to say, you've surpassed yourself with avoirdupois.
It's French.
It's fantastic, Jeff.
That's all I know.
I'm just so impressed with your bilinguality. But do you know, I didn't know what this was, but it's interesting. System of weights for commodities, except precious metals, stones, and drugs. 1 avoirdupois ounce is 28.35 grams, or 437.5 grains.
Grains, yes, of course, and it was grains, literally grains. That was the measurement of gold back in the day, as they say, back many centuries ago.
Right.
So it was weighed against grains of corn.
We should be bringing back more terms like this because there's something that these are the things that bring things alive. These terms.
Yeah, they do actually. I actually created this glossary of terms when I was in London, and as some people might know, and you might know, I was the founding editor of the LBMA's Alchemist magazine that is published. I think it's quarterly these days. But as part of that, I actually developed this glossary of terms because there were so much terminology that I didn't understand. I was hearing this terminology and didn't know what it was. And I did it for my own purposes. And then one bright spark at the LBMA said, why don't we publish this? And so we did. And so I'm now kind of regurgitating it. Yes, I'm going back to A. Unfortunately, it's only A to Z or A to Z. And but not everyone would have seen the first edition, so I'm repeating it again, and almost back to your favourite, which is it's one of your favourites, which is backwardation.
Backwardation I like a lot, but avoirdupois, I don't know. I feel more sophisticated when I use terms in French.
Yeah, don't use it in the restaurant though; it won't work.
No, I know, but it's just I have a little avoirdupois, and then everybody's happy. Oh man, Jeff,
very good.
Always good to talk to you. Singapore this week, back in Dubai next week. It's Eid. We won't see you, but we'll see you hopefully in a couple of weeks.
Yeah, okay. And when is Eid, Tim? I'd lost track.
Eid is, it's been announced for private sector Tuesday through Friday. So 4 days. And then the weekend runs as well. So lots of people with a week. Some people with as much as 9 days off.
Wow. Does that include you?
It doesn't include me, unfortunately. But as you well know, no peace for the wicked, Jeff.
Well, I guess that's why I'm still working.
Yeah, you said it, not me. Good to chat to you. Appreciate you coming on.
Take care.
Jeff Rhodes,
Cheers,
Managing Director for Business Development in the Middle East and Asia at Monetary Metals, the oracle that is Jeff Rhodes. This is Mira Business FM.
Mira Business FM, where business comes to talk. Mira Business FM, where business comes to talk.
It's the Morning Drive. A recent international report, and anecdotal reports as well, to be fair, has raised concerns about geopolitical risk and questioned whether the region's appeal to the ultra-high net worth and high net worth individual could face headwinds. But how much of this narrative reflects reality and how much is simply noise in a shifting global landscape. To break that down, we're joined by Christopher Rose, who is a family office strategist, works closely with high net worth individuals who are navigating exactly those kinds of decisions. Christopher, it's good to welcome you back to the show.
Great to be back. Thanks, Tim.
You're in London at the moment, so I appreciate you joining us this early in the morning. Let me just begin, first of all, with how are global investors and high net worth, ultra high net worth individuals actually reacting to recent geopolitical headlines involving the region? And I guess I should add to that the positive news this morning as well.
Absolutely. People are watching closely, and the news today certainly has helped. Maybe we'll start to see the end of this. But in general, we've not seen any kind of wholesale shift away from the UAE, at least with the families I'm speaking with. I think most of, yeah.
No, sorry, go on. Carry
on. When I'm talking to people, I find that most sophisticated investors, separate headline risk from structural risk. The key question they're asking is, does this change the long-term case for being here? And so far, the answer has been no.
Well, it's good to hear that. I was going to ask you, are we seeing any real shift in capital flows away from Dubai? How is demand, if you like?
We're seeing more of a pause and reassess, not a real shift or exit any. I think conversations are taking longer. Capital deployment's more selective, but I think that's sort of everywhere right now.
I mean, it would seem to be, and I think we use the word pause and have used the word pause for the last 5 weeks. Really, that really seems to be kind of the attitude towards it. Is there such a thing, Christopher, as a risk mitigation checklist for family offices that people like yourself, professionals like you, might recommend or have recommended during the time that we've been in? And what would that list look like if there was one?
Well, I think it's, family offices start with downside protection, not upside. So I think that list would start with, is my family safe? Is the jurisdiction stable and predictable? And can I continue to operate normally? And I think it's really as basic as that. And that's where the UAE has built credibility. And I think that's why people are continuing to stay in the region. I think most people, family offices, when you create a family office, it's very sticky. It's a long-term planning involved. So you don't just pick up and leave right away. And so I think maybe for short-term, for people who just recently come into the country, can come and go very easily. That's one thing, but family offices are stickier.
There's been so much speculation about geopolitical risk, particularly now, of course, and it might be cooling the UAE, the region's appeal to the ultra wealthy. You're in the room with families, I guess, weekly, daily. To what extent are clients raising concerns about regional tensions or looking for an exit, and are they looking for? Do they see the headlines as a temporary storm? We've seen this before. And are they generally more focused on that long term? Is that the experience you've had in the last 5 weeks or so?
Pretty much, yeah. I think that they're aware of the risk, but they're not acting emotionally. I think, as you suggested, most families take a longer term view. So the conversation hasn't been, should we leave? It's, how do we make sure we're structured to stay resilient no matter what happens?
And do you find that families showing the most concern come from maybe the West? Are the newer wealth families, if you like, I don't know, from Russia or India or China, do they still view the UAE as like a primary hedge against volatility from volatility in their home markets?
I think the important thing is how the UAE has reacted during this crisis. It's been very measured and consistent with its approach. It's defended its population. It's supported business. And I think a lot of families are looking at how jurisdictions react under pressure, as opposed to making immediate knee-jerk reactions on a current situation.
And I guess what's really key is regulatory stability, isn't it? And infrastructure that really helps when things are tough. That keeps the confidence up, doesn't it?
It does. For serious wealth, this isn't just about tax or lifestyle. It's about whether there's a reliable system underneath everything. And, the UAE, particularly through DIFC and ADGM, they have credible legal and regulatory frameworks that people trust. And it's consistency that holds confidence together during uncertain periods.
From your standpoint, I know you're in London at the moment. What's your view, from outside looking in, if you like, if you were to take a step back and from outside of the region, how resilient do you see Dubai's positioning compared to, the other wealth hubs, the Singapores, or where you are now in London?
Well, I think that, first, I'm just here for a few days for the Easter break. I'll be right back. Right. But I think that compared to Singapore and London, Dubai is newer as a financial center. But it's been very deliberate how it's built itself around safety, infrastructure, and global connectivity. And I think what really people look at is how Dubai managed itself during COVID. And I think a lot of people are pulling that playbook back right now in terms of keeping things operational. At the time during COVID, Dubai and UAE opened earlier than most places. That drove a lot of capital into the market. Now we're seeing a different type of test, but the response has been measured and with a clear focus on stability and protecting people. And I think Dubai's advantage is that shown in real time they can operate under pressure, and for global capital that matters.
Well, it does. I think it's interesting that you're outside of the region at the moment. I know you're based here, but I wonder what your feeling is now that you're in London over the Easter break,
sure,
as to how much of a geopolitical headwind narrative is coming from analysts in places like London or maybe New York or wherever, who maybe don't understand the kind of local firewalls that the UAE's built over recent times, the last decade or so.
Yeah, that's a fair comment. I think that sometimes the perception outside the market is different than the reality in the market. I mean, you speak to friends. Even the last week, the restaurants and bars have been full. People are acting, relatively like they were earlier. Maybe it's a little quieter, and I think that would surprise a lot of people in other markets who would just assume people would run for the hills. But so far, we've not seen that in UAE.
No, we really haven't seen that. I wonder as well, to what extent do media narratives influence investor sentiment versus, that on the ground, the reality that you and I are very well aware of?
It certainly does, but it's usually short term. I think at least any wealthy family don't take their advice from the headlines. They speak to their advisors. They're talking to the banks. They're talking to people on the ground. These are very thoughtful processes. So it might make you pause immediately, but I think people bounce back. I think the article that you're referring to was back at March 5th when we were just shortly a little way into this. It hadn't really played out yet, and I think a new article would probably be different even outside the UAE right now.
Yeah, well, you would hope so. I mean, there are so many articles. The issue, of course, is everything is compounded by social media as well, and that kind of constant narrative delivered directly to your phone, to your personal kind of ecosystem, if you like. What misconceptions do you feel international coverage often gets wrong about the wealth ecosystem here in Dubai?
I think the biggest misconception is that's all short-term or opportunistic. And really, in reality, what we've been seeing is an increase in institutionalization, particularly with family offices and long-term capital structures being set up. That's very different from simply attracting wealthy individuals.
Yeah. What sectors in particular continue to attract the most interest from high net worth individuals here in Dubai, the UAE, but also, I guess, the region by extension?
Well, right now, I'd frame it slightly differently in this environment. It's less about which sectors are hot, maybe, or how capital is behaving. What I'm seeing, and this comes up consistently in conversations with family offices, is a defensive and selective approach. People are focused on the typical sectors, real estate, potentially opportunistically right now, taking a look and seeing whether there are some opportunities there. In other sectors right now, I think people are watching closely, including hospitality and consumer-facing businesses, which are under pressure.
Okay, let's look ahead. What you believe may lie ahead for Dubai in terms of growth. Do you expect acceleration in Dubai as a global wealth center, or are we in a period of perhaps, a holding pattern, a stabilization pattern?
In the short term, I mean, again, the news today may change everything, and fingers crossed it does. But in the short term, if you'd asked me yesterday, you may see some pauses depending on global conditions, but structurally, the trajectory still looks strong. I think the UAE has shown repeatedly that can manage through difficult periods, and ultimately capital flows to places that combine stability, infrastructure, and positioning, and the UAE still offers that.
I was thinking of asking you something like this morning until the headlines came in at around about 4:15 this morning. But I was going to ask you, if a family office principal were to call you today and say to you, Christopher, I'm worried about the headlines. I was going to say, what's the one data point that you would maybe give, somebody with that kind of on that kind of call to settle their nerves, if you like. But I suppose conversations like that today probably have a different slant, don't they?
Slightly, yes. I mean, as I indicated before, these decisions aren't, I'm just moving to Dubai. You look carefully at the regulatory regime and the tax and other aspects of how you would establish your structure. And this decision's made over several months. So I think that people who seriously looked at Dubai continue to seriously look at Dubai, and they compare it to Singapore and other jurisdictions. But at the end of the day, I don't think this changes that much, especially if we see an end to the conflict soon.
Business as usual. Can I put one final thing to you? This is something that I've read that you've said, and I think this is a salient point. The ultra wealthy don't move based on headlines. They move based on structural resilience. So in very simple terms, the UAE is built on, they built a legal, a financial kind of fortress that's going to be very hard to replicate anywhere else. It will certainly take a long time to replicate. So rather than should we leave the Middle East, isn't the question for family offices right now, how do we use the Middle East, the region, as a global base to better manage a volatile world?
No, I think that states it well. I think these families are looking at the next 50 years, not the next 5 years.
Yeah.
And they are looking for stability and consistency in application, especially on the regulatory side. And regardless of the conflict that we've just experienced, I think that UAE has proven that it still is a regulatory appropriate jurisdiction and a safe haven to move your capital. I think we're going to see volatility throughout the world in the coming years. It's inevitable, but it's how people handle crisis and how they manage the pressure that I think the families will look out for.
I think that's the point, isn't it? I realize it's very much a speculative conversation. This is all a movable feast at the moment, Christopher. But your perspective from London is interesting, as always. Hopefully we can welcome you back to the studio soon. But for now, Christopher Rice is a family office strategist. And thank you once again for joining us.
My pleasure. Thank you for having me.
Good to have you on. This is Mira Business FM.
Mira Business FM. The sound of success.
It's Mira Business FM. It's the morning drive, and David McKenzie is here. He's the MD of McKenzie Jones. He is kind of he's the pit bull. He's the Belgian Malinois of McKenzie Jones.
Sounds aggressive.
It sounds authoritative, I think. I think pit bulls, they're lovely until they turn.
I've never heard anybody. I've got a Malinois. I've never heard him call it.
Have you really?
Yeah, I've got. He's a cut and shut. He's a Dubai dog.
Okay.
So he's
a cut and shut.
Yeah. Part of him is a Malinois. He looks like a Malinois, but he's got a curly tail and floppy ears. So everyone goes, he's a Malinois cross, isn't he? So that's a nice way of putting it.
That's good.
He's what my kids call a generic dog.
Okay.
Dubai generic dog.
I had a friend who had a dog that had 3 legs a few years ago, and I always sort of thought, could you not get a whole one? I don't know, it was terrible. Did you never like me saying it? But they took in this poor creature. There's a running joke for years. Awful. I know, I should be sanctioned.
Yeah, but I won't tell these jokes on air, but the one about the names of office people, like the guy that had one leg shorter, he was called these. No, I'm not going to say this.
No, you probably better not. Yeah, no, we can't do that. There are clean versions of those.
Yes.
Welcome.
Yes, thank you.
How to talk money, how to get what you deserve, salary expectations. So I thought we could split this into two parts. So the first part of this is how to do that, how to put yourself across in the right way, how to understand your worth, and then we'll run through some real examples in part two, kind of the employment life cycle and the questions that you need to ask. My first question to you, David Mackenzie, the Belgian Malinois, the German Shepherd of Mackenzie Jones, the Pekingese.
No.
There are loads.
No.
I know. Why is it that talking about money is so difficult?
Yeah, it's a very emotive point. People generally, I mean, we talked to him. Faraji just mentioned I'm terrible at doing that.
Yeah.
But I think people genuinely are. That there's two reasons mainly. Money has always been seen since your parents' days as something you just don't discuss. You don't talk about. You don't go up to. You don't know how much I earn, do you?
No, but I have a policy about this.
Well,
I joined a place a few years ago, and I was chatting to somebody who did a very similar role, and she said to me, "How much? What did you sign for? How much do you earn?" I went, "I'm not going to tell you." "Oh, don't be silly. No, of course you'll tell me. What did they offer?" I'm not going to tell you. And there was a 5-minute backwards and forwards of, "No, you're being silly. I don't believe you. You're just playing around. You're messing me about. Blah blah blah." I will not ever tell you. And there's a reason for that. I don't care what you earn. What I earn is what I earn.
Yep.
And money always, for me, in my experience, always creates division or unnecessary competition. I'm there to do the job. I accepted it, be that on my own head if I highballed or lowballed. It doesn't matter.
No,
it's of no consequence.
I think your strategy is absolutely spot on.
To be honest.
But the reality is, we're friends and you don't know how much I earn. And there's a social stigma to that. You don't want to ask somebody what they earn because it seems to be rude. Now, if you take that
culturally to
that's
you
what I mean.
and I.
Yeah. So I'm looking at the very basis of why people don't like talking about money. So when you then go into an interview situation, you're in a workplace. By the way, I think what you did is exactly right. I don't tell my guys how much I earn in my company. They'd be a little disappointed, I think.
You don't lowball yourself publicly.
Well, I think I need a salary rise, but I can't. I haven't got the courage to ask myself.
You either have a policy that everything is completely open and it is always open, or it's something that I just see it as a division.
There is, and let's face it. What comes out of knowing your peers' salary? There'll only be an issue if you're earning more than them. Then they're going to complain.
Yeah.
So I think there are two things. One is that social stigma. People don't want to talk about money. The second one is people feel very uncomfortable asking for things, bizarrely enough, in a workplace. Because an employer, you work for an employer and they have to pay you for your services. It's a common transaction, centuries old.
Yeah.
But when you go in there and somebody says to you, "Okay, it's your review. What are you looking to earn?" I reckon about 80% of people will go, "What?"
Well, that's what we're hoping to get over today. But you're right, and I'm still at this first hurdle of why I kind of clam up when somebody says, ask me that question, and why I find it so difficult to talk about. And consequently, I just don't really talk about money. I'm not everything is about money, of course it is, but I'm not massively. It's not the most important thing to me. I think that sounds so trite, doesn't it? It sounds so wrong, but it's not.
But the irony, nor is it to me, and I run my own business.
I can tell.
Stop it. But your point is a really good one. I think people feel very uncomfortable talking about money, and there's also the imposter syndrome. So when you go into an interview and your boss said to you, "It's your review time," and how do you think things have gone? You never, ever bring up money. Nobody ever brings up money. They leave it to the very end and go, "Oh, excuse me, can we talk about money?" Yeah. And it's almost like an afterthought. My view is that there are a thing called the 3 C's, I think. I wrote these down, actually, because I knew I wouldn't remember them all. But they're the art of negotiation, okay? And he's slipping his glasses on. So it's clarity.
Okay.
Which is know your goals.
Right.
Confidence, being able to be very clear about what you want to say and what you want to get from that conversation.
Can I guess the last one? No, okay.
Let me do this because I've prepared for this. Raj, will you tell him? I spend time doing this. I have a day job as well. Communication, which is articulate your needs clearly. Collaboration, which is work together to get the right objective. What's the last one?
I don't know.
Come on. Okay, compromise. Being able to
ready to.
This is the key: is being able to. You say, right, Tim, what are you expecting? This is your review. What are you expecting salary? And you go 13. Well, you're actually on 20. Okay, we haven't got that in our budget, and your immediate reaction will probably sit there and not say anything, or go.
No, mine is all right. I'm off. Bye.
It's probably not the right way of doing it.
What are you going to do now?
But the point is, you've got to during that process of that communication, you've got to be in a situation at the end of it, you can mutually agree something.
Yeah.
And that compromise thing is something candidates are really bad about in this market. And this is why people use recruiters to do their negotiation on their behalf. It's one of the power things we have because we're a third party. We're not emotionally tied to this. We can negotiate on behalf of a candidate. And I can tell you, we, most of the time, I don't know the percentage, will get a higher amount than you can possibly do.
I would imagine, well, you're divorced from the process, aren't you? There's no skin in game.
Does benefit us, though, because the higher the money we get, the more the client has to pay us.
Okay.
So we are, in that respect, we're on the candidate side. But you've got to remember, we have two clients. One is the candidate, one is the client. If the client says, no, you're way too much, and we lose that candidate the job, that candidate's going to be annoyed with us. So we need to make sure we understand the ballpark.
Your thing is about fairness, isn't it? And
Absolutely.
it is about understanding worth and understanding the market and finding the balance.
Yeah.
So, and as a candidate, that's what we have to do as well when we are, discussing money. It's very difficult. And I've been looking at this. I've read lots of different articles about this. When you navigate the sort of financial aspects of a job, the questions you ask, when you ask them, signal maturity, sort of professional maturity.
Yes.
Right? So that's a good thing to keep in mind because you need to have that attitude. It's a good thing in the workplace.
Yeah.
Senior level candidates view compensation as, from what I understand, it's a two-way business agreement. It's not an awkward negotiation.
No.
It's an agreement, and that's the way you need to look at it. And there is push and there is pull as well.
And there often is compromise on both sides.
Sure.
So we've had a candidate recently. So when we go into the process of talking to a candidate about a job, one of the first things we ask after we've been through their CV is, what are you currently paid? It's amazing how many candidates won't tell us. Because they think that if they tell us they're on 30K and the job's paying 40, they're only going to get 32.
Okay. But why would you hide that from the recruitment person who's actively...
Exactly, because there's a trust value in that. And,
Really?
and this is where candidates have to understand that the more transparent you are with us, the better we can negotiate on your behalf. And the reason why most candidates won't tell us is because they're on artificially low salary. And if they don't tell us, one of our things is we will not put them forward to a job. Because when we work with clients are very transparent about what their salary parameters are, and we have to negotiate on their behalf. If a candidate says, I'm not going to tell you, we cannot put them forward for a job not knowing what they're currently paid.
Or you could put them forward and just lowball it.
Yeah, but that's not...
you can't do that, obviously, but...
My job is...
It doesn't make sense, does it?
No, but your point is we're about fairness. We want to make sure the candidate has the best job in the world and the client has the best candidate. And we must negotiate between those two to get the best package for the candidate and for the client.
Right.
Both must come out of it happy. And that's the key thing for us.
So, when it comes down to you're about to have an interview and at some point you're going to discuss money in an interview. Yep. Okay, let's look at this kind of dispassionately. It's about three things, and I wonder, this comes from, I've kind of put together a load of different articles, lots of different opinions, but generally this seems to come out. So it's about timing, research, and framing. Okay, does that seem reasonable? Yeah, okay,
very logical.
Research your market value, politely deflect early salary questions until you have leverage.
I'm not sure what that means.
Well, don't admit anything until you've got the upper hand, I suppose, in the interview, or you feel as though you have the upper hand in the interview.
I'm much more open about this, and I think
I had a feeling you would be. But seriously, all of these articles that I read, it was very much about, you're in this situation, which is a
power
it's
play.
a discussion. There's an element of power play in every interview, of course there is. Okay, so those were things. To negotiate a competitive compensation package once an offer is made is something, that's the backwards and forwards. And frame the discussion around the value, that you bring, rather than what you're looking for, the needs that you might have.
Nailed it. That's exactly what it is.
Yeah.
You've got to look at the intangible of you're joining this company.
Right.
You have to convince you as the client that you're going to add value, whatever it be in a sales term, as an HR term, to that company. So that company is a better place and gets more value out of you than candidate B.
Yeah.
You've then got to put a value on what that increase to their company will be.
Okay.
So going back to your point about the competitive nature of negotiation, and that's where we're sort of going on this.
It
is that it should never be an awkward conversation, because if you've done what you've said, and I think the thing about research is very, very key to this. What is your value in the marketplace? What does this job role pay? If you're working with a recruiter, ask them what the salary range is. And if they say, well, it's X to X, well, I'm currently on 50, I'm looking for 60. Is that within their remit? And the recruiter will go yes or no. If they go, no, you're above the salary range, you have to decide whether you still want to go for that job. Don't go for that job if you are still going to go in there and at the last minute try and say, I'll only move for 60.
Yeah,
you will lose a recruiter over that.
No, that makes sense. I mean, I get that. So let's talk about...
Tim, you say that. It's happening all the time at the moment.
Is it really?
Because people are... There's a certain desperation to people now to try and get the maximum return on jobs because the market's more expensive. So people are sometimes not being totally honest with us. And 9 times out of 10, if they're not, they will not get the offer.
So people take a very short-term approach, don't they?
Super short. We had one the other day. I mean, I think I told you about it. We had a really senior guy. Yeah. We got him the right package, the right role. And at the end, he went, I just don't think this is the right job for me. He'd had 6 interviews. Never once had told us he was feeling unsure. He'd met everyone in the company. And it created a bad feeling for the company for that candidate.
Right.
It left us with a bad impression of him. And he's been a candidate of ours for 10 or 15 years. And the client questioned our process.
What do you think it was?
I don't think he ever wanted to go for the job in the first place.
Really?
I think he was just testing the market. Fine, if you can do that, tell us. We can put backups in there then.
That's that's such a waste of time.
Honestly, it's frustrating. It really annoys me. I much prefer to candidates say all the way through, like I'm still a bit 50-50 on this, David. I go, do you want me to carry on the process? Yes, I do. I will tell the client he's still a bit unsure. Then there's a two-way communication. And if we know what the problem is, we can tell the client may be able to fix that problem.
And also, if it doesn't go to plan, there's no ill feeling, or far less ill feeling.
And let's face it, you don't want to have ill feeling with a client or a recruiter.
No, that doesn't seem sensible.
No. Bear in mind, they're the conduit to your new jobs.
Well, exactly. Yeah, and I see it as a long-term game.
Yes.
If you're going to spend 40, 45 years working, building a career, however long it is, I know.
So depressing.
No, that brings it home. You might as well. I just think make it as easy as possible, but that's me. So let's talk about timing. I'll make a statement, okay, and see if you agree. It's best to hold off on discussing money until the employer expresses clear interest or extends an offer.
In theory, yes. In practice, it doesn't happen like that.
Right.
Because what happens typically in the first interview, giving a recent example, I've got a very good client who's a shipping company. Their group HR director is a lovely lady. I won't mention her name because she's probably listening. But what she does, her first interview is a culture meeting. So she talks about, what do you like working in? What have you done? Have you done it? And by the way, the last question she always asks, what package are you currently on? By the way, we've already found that information. We've sent it to her. And it's her way of seeing whether the candidate is going to ask for more than we've told.
Okay.
Which is not a great way of doing it.
No.
But what it does, it then frames whether that candidate is the right one for the role they're putting together.
So that it gives you a real idea of fit.
Now, what they don't do then is they don't negotiate salary. She goes, tell me about your package. I'm on this, I get school fees, I go, whatever. She goes, okay, thank you. There's no negotiation. Then we know what that candidate is, or she knows, and she goes, right person, right culture fit, right package, done. Next interview stage.
Okay, so let's say not everybody takes that approach, but somebody in a first sort of screening interview asks you, what do you do? Do you turn the conversation around and, say that you're really, I'm going to be really enthusiastic about the role and my expectations will probably align, but you don't do that?
No.
Don't. Okay.
So your first statement is technically correct. So what happens is, if you're not using a recruiter, you will go through the process and you'll get to the end, and your last meeting will be with your line manager or the HR person.
Okay.
Well, they will go, let me reconfirm what you're earning and what are you looking for? And then they will go, this is our offer. This is the start of the negotiation.
Right.
Unless they give you an amazing offer, don't be greedy. Say, look, and then when anyone offers you a package, say, look, thank you so much. I've really enjoyed this process. Would you mind if I take a bit of time to think about this? Always be grateful. Even if it's dramatically lower than you think, you need to be humble and thankful for the process, because they will remember that. That's the art of negotiation. You might come off the phone and go, that was rubbish. But then don't ever do anything emotionally charged. Because if you've been given, say you're on 50 and they've come back and said, look, we got a great offer, it's 51. Part of you goes, what? I've just wasted 3 interviews. So you're automatically angry or upset or emotional. And if you then start to negotiate, you're negotiating from a very bad point.
What if you take the view that, okay, so 51, you're deflated. Is it okay to be deflated by that? Do you think that?
Yeah, I wouldn't use those terms. I would just say, look, in all honesty, I was expecting more, but would you mind if I just reflect on this and the process and come back to you?
Because that seems to me a lowball approach. If somebody comes back and,
By the way, everyone is lowballing at the moment.
I bet they are, yeah.
Because the perception is there's so much talent in the marketplace that you can offer lower salaries.
Right.
We push back on this all the time, constantly. And I've just negotiated a salary for one of my best mates, and I got her a really good increase, but she was going to accept one about 5 to 6K less because she thought that was good.
Really?
I just said to her, go back, and I did all these stages, and she got much better. She's super happy.
I bet.
That's why she's friends with me.
Yeah, well, there you are. That's why we invite you back.
Exactly.
When an interview asks for salary expectations, what do you do when it's a very direct? What are you looking for? Should you take like a researched range and try and tie that to the value, the value that you're offering? Is that how do you do it?
It's a very difficult one. This is the most difficult part of it, because you have to put a figure that you're happy with and you think the client seems acceptable. Most people get this wrong because they don't do what you said is research. They don't do the thought process. Example, if you're on 40, people would expect now in this market, but probably around 50, 55 if you're lucky. Clients expect 45 to 48. Just as I'm doing very generalist in view here.
Yeah.
So whatever you say to the client may not go for it. But do not lowball yourself. But don't put yourself in SpaceX territory where you've given yourself a huge amount, because the client will clam up, and that'll be it. So what you have to say is, look, I'm currently on this. My expectation is I'm on 50. My current expectation is around 60. And these are the reasons why I think this is it. I've done my research in the marketplace and I believe this role. Then stop talking.
Yeah, well, I want to come to that actually, because the talking too much is another side of this, isn't it? All right then. So everything about this is knowing your worth and understanding people in your industry, what they earn, what they do, their years of experience. You've got to be able to benchmark yourself, haven't you?
Yes,
That's
yeah.
the key before you go in. Okay, so that's very clear. If somebody says to you, what are your salary expectations? Could you say something like, "Let me read you and make another statement. I've got loads of things here I want to just judge by your
Look at him,
reaction."
he's been researching a week for this.
I know. I've really sat and thought about this because I think this is
Are you about to go through a round of
difficult.
negotiating your salary? Is that why I'm on?
Don't I wish? Not right now, let me tell you. Based on my research of market rates and my specific experience with, my role, I'm targeting a base salary in the range of X to Y, whatever that range is. However, I'm flexible. I'm open to discussing the full compensation package once we discuss the exact responsibilities of the role. So I'm kind of being open, but kind of kicking it back and not making a commitment. Is that reasonable?
Yeah, that's a very reasonable thing to say. Just be careful about. You almost need to know your worth before you go into a meeting, because you need to set a ballpark of where you think, and it can't be. I'm currently on 40. I'm looking anywhere between 50 and 70. Asking, that's a ridiculous range.
Yeah, that seems a bit.
So you say I'm on 40. I'm looking around the 50s, but to be honest with you, the package is one thing. What we've discussed about the job, you flip this now. What we've discussed about is the bit I'm really interested in, because I really see this job doing X, and I really think with my experience I can add huge amounts of value. Right. You've then flipped the conversation into positives. Right. You've moved away from the confrontation and you're into the positives about what you like about the company, the job, and the client's going, awesome, I like this person.
Yeah, okay. No, I get that.
Everything must be, you must make the person at the other end come out feeling that by employing you, they're going to significantly increase the worth of their business in whichever format.
So when a company makes an offer, assuming that you've done all of those things and the positives are there, acceptance is the thing. You should always take some time to review it. I guess never kind of say, "Yeah, right, I'm in," and should we just don't accept the first number on the spot. Is that good advice, or you may always take time?
Yeah, you may end up accepting the first offer, but the reality is don't. Know when to accept and know when to push back. So whatever happens, when anybody if somebody comes to me and says, and I'm on 40K, they're going to offer me 60 or 70, I'm going to go, look, I've really enjoyed this process. I'd like to reflect on the package. I think that looks really exciting. Mm-hmm. Let me come back to you in a day or two. Would that be okay?
Okay.
I want to talk to my partner. I want to talk to people that advise me, all those things.
I want to run around outside
and then
with a hat
on. Before make sure you hang up before you go, woohoo!
Exactly. Yeah. Well, that's okay. So that's
champagne cork pops.
So you need to. I mean, it is very much about keeping up a professional air, isn't it? Even if you've been lowballed or highballed, or it sounds great or it doesn't sound great. What do you say if an offer is too low? How do you?
We've had this recently, actually. So a client said, I'd like to talk to the candidate direct. And I said, okay, no issues. What are you going to offer? And she gave me the package. And I went, you can't do that.
Really?
And she said, why? I said, because it's too low. They're going to turn it down. I've told you what they'll accept.
Yeah.
And she goes, I want to do it anyway. I said, fine, you're cool. Did it, candidate turned it down. And the reality is, the client was lucky because she came out and said, look, you were right. I got that wrong. What does it need to take this person? I said, well, you've just given them a low ball, so you're automatically thinking negatively about you now. Yeah. As a client, be careful of doing this, because example, I know we keep talking figures. If you've got somebody on 40 and you're willing to offer them 50, don't go in and say, well, I'm going to offer 45, but I'll go to 50. Because as soon as you do that to somebody, they're going to go, they know I want 50. It's not unreasonable. Why are they offering me 45? It's a no. You've just created a negative feeling between you and the company.
Yeah, I mean, why did this person, do you think, want to talk to this person directly and lowball them? What was the motivation there?
I think the problem is what happens when you get the sign-off from a finance person, which typically might be a finance person. Okay. They've gone, yeah, we can go to 50, but try and get them at 48, would you?
Okay.
Again, it's a false economy. Right. What you want is people joining your organisation knowing the process has been great, that you feel super valued coming into the business. So if you're never going to offer them 50, offer them 48. Don't go, I'm going to offer them 48, and then if they reject it, I'll take them to 50. Okay. So it's just not worth doing, because you're saving yourself $2,000, but you're creating immediately in that person's head, they're trying to lowball me.
Yeah,
it's a negative perception of a company. So we've got one. I keep talking to you about Altair. They're really good about how they negotiate. They tell us exactly what the package is. We tell the candidate exactly what the package is. And when it comes to an offer, the client offers exactly what they're going to say. And so there's the candidate always goes, yep, I'm going to take it. We never have turn downs there, because it's really clear. They're very open about how they do things.
Okay. If an offer's too low, let me just put another statement to you here. I'm using you as like the sounding board today, but there's so much to offer.
Well, technically, I am the guru of recruitment.
Guru?
Or GNU.
You're the metal guru, are you not? Thank you so much for the offer. I'm very excited about the opportunity. This is if it's too low.
Too low, yeah.
Given my experience and the value that I can bring to this specific project role, whatever, I was hoping we could get closer to a higher number, whatever that number is in the range. Be specific. Is there any room to adjust the base salary? Is that a reasonable way to do it? Would you react to that?
Very nice way of doing it. I think it's, so? and it's to the point, because you're not saying you're turning it down, but you're not saying you're accepting.
I thought that was quite a positive way to approach it.
Yeah, I like that.
Okay.
That's a nice way to do it.
All right then. So if you're asked about salary expectations, you shouldn't say, I'm on 100 and a 10% increase would be great. You shouldn't. No. You should never do that.
Would be great. Would be great.
I know. Would be is
it's not going to happen.
Conditional on it's never going to be a thing.
No.
Right.
So the other bit about salary negotiation, in this current market, clients are having to tighten their belts for obvious reasons due to the economy, etc. That will change. So if a client says, "Look, you're on 40, the most we can go to is 45," and I want to tell you that really up front. Right. But what we can do, we can put KPIs, key performance indicators, i.e. bench sort of goals, for you over the next 6 months. If you achieve those things, we'll put you to 50 in December.
Okay.
That's a client being very open, but giving you an incentive. If you achieve what we would term as realistic KPIs, you will go to the 50 you want.
All right then, because if you say a number that's too low, you're always going to be low.
Nobody ever says a number too low. I will tell you that in the 30 years I've been in recruitment, nobody says too low.
Really?
It never happens.
Right.
It's like somebody asks you how tall you are, Tim. If you're 5'10", you'll say 5'11", because you're a bloke.
See, the thing is, I need to grow up. I'm too truthful. I'm an innocent, I think. If you say a number too high and you try and highball all the time, you kind of disqualify yourself. You're too expensive, aren't you? Right.
Yeah, okay. and believe me, in this market, if you go, you're way too high. So you're on 40, and how much you're looking for 60. The client's going to go, A, it's not realistic. There's no negotiation there. There's no backing for why he thinks it's worth 60. And there are other candidates that we can get at 50.
Sure. How entitled is that guy? Girl.
Oh. There's a lot.
Well, that's a whole different topic, isn't it? All right. You're asked for a salary expectation. Thanks for the question. Can you share the approved salary range for the role? Is that a way to approach it? Is that a different way to approach it?
Or
but is that digging?
No, it's digging a bit, because what you're saying to that client is, you've told me one thing, but how far can this salary go up?
Okay.
Because I want to push a bit harder.
What if they don't have a range? They're not willing to share a range. I mean, my guess is some people would share a range. It really, I mean, this is hypothetical.
Most clients won't, by the way.
Most clients really wouldn't.
No,
okay,
no.
So
they will to us, because we're seen as to be the arbitrators between the candidate and the client.
Right.
But if you're going for an interview and you ask a client, "What's your range?" I guarantee what they will most say, "We'll pay whatever it takes to get the right person." That's the stock answer.
That's a great answer.
It is a great answer.
Yeah, it is, yeah.
And the candidate automatically goes, "Right, I was asking for 50, now I'm going to ask for 55.
Right, okay.
And then what happens with most turn downs is candidates' expectations are way too high of what their ability is.
Okay. If so, there's no range. Can you then say, look, I'm flexible. What are you currently paying people in this role? Is that a way to do it?
So you give a really good one there. I'm trying to get my words out.
Here we go.
I got really excited then because you brought something out
you
I
did.
hadn't thought about. A really good thing is when you're going through the interview process, typically what you say is this a new role or is this a replacement? And they go, it's a replacement. What happened to the old person? Oh, they got a new job elsewhere.
Okay.
Where have they gone? Oh, they've gone to X company. What was that salary level when they left? Are you paying above or below that? It's a cocky question.
It's good though.
But it's a good one.
I like
And
that.
if they go, well, we can't tell you that, fair enough.
Okay. If you get a rough idea of what people are paying, or you have a range, and you're not quite at the
Top end. You should
top
never
end.
be at the top end, by the way.
Well, that's the thing. Can you say something like, or should you say something like, okay, what kind of experience would I need, or what would I kind of have to do to earn the top end? Don't do that.
No. Because, well, certainly the levels I'll deal at, all the people I'm dealing at are experienced people. You wouldn't ask that question because it's sort of a non-question. It doesn't mean anything. It's like saying, if I had wings, I could fly. You don't have wings at the moment, so you can't fly. So it's a non-question.
Okay.
Does that analogy work?
No, that does work. Yeah. There's so many things I wanted to ask you, and I feel like I'm learning again today as well.
I feel like I'm
You are the guru.
imparting
You're
good advice to you.
imparting
hopefully.
knowledge, proper good. But how much can you, if somebody really pushes for a number, or a recruiter really pushes you for a number, and you really need that transparency, and for whatever reason your candidate won't give that, and there may be a reason for that. How would I deal with that? Because if I'm shy for whatever reason.
Well, if you're shy, then you use people like us to take away that element of shyness because we're the ones that are quite happy to front up to a client and have a discussion. Because remember, we have a good relationship with the client. We can have a much more honest discussion with the client. So if you don't feel confident telling your recruiter, you are making them go into a knife fight with a one hand tied behind their back. It's not a fair fight.
Yeah.
You've got to give us every tool in your armory or every weapon in your army to help us get you the best amount of money. But you must take our advice. You must be realistic. We don't lowball candidates. Not our job. Our job is to get you the best offer possible that you and the client will accept. If you think you're worth 60 and a client thinks you're only worth 55, you can keep pushing for 60, but the client will go, no. And if they keep saying no, they're never going to say yes. So you've lost that job. You've got it. It's a fine line, this. And you have to read how clients are. And that whole point, and I think you said it before, about research, about preparation, the negotiation bit is the most difficult part of the whole interview process.
It is, and the research and knowing your worth is the starting
Key.
point. And
It's absolute paramount.
I think a lot of people we get used to our roles and think that we'll just fit into the next one without really understanding how things have changed when you've been in that position for 5 years, 10 years.
The worst thing anyone says to me, I say, why are you expecting 60? Because I'm worth that. And I go, what have you based that on? Well, I just know I'm good and I'm worth that. Is that based on the amount of money you need to earn to live? Or is it based on your best friends in a similar role earning that? Yeah. Well, a bit of both. Well, that's not what the client's going to be interested in. The client's going to be saying, if I pay this person 60K, are they going to multiply their business by 10 times or 5 times? Are they worth hiring? You might actually make a client pay you more because during the interview process, they've uncovered a bit that they didn't realize that you're really good at. And that could be massive value to the company.
Yeah. It's not all roles are created equal, are they? It's not great to say...
The famous George Orwell expression, everyone's equal, but some are more equal than others.
Well, exactly. So my friends in marketing, they're earning this, I should be earning that, and the skills may be completely different. So it's also being realistic about your value, isn't it, I guess, first of all. So let's sum up how to approach salary expectations with confidence. Do your research, know the market range, in that industry, in that company, whatever it is. Be informed. Don't be vague either.
Yes.
That's the starting point, right?
Be confident.
Be confident in your abilities. When you're asked about expectations, connect your compensations to the outcomes that you drive or the scope that you handle. It's not, and I think basically what you were saying earlier was it's not just about the role, it's about the impact you can have in the role.
That's exactly what it's about.
Yeah.
They're not hiring a like-for-like person. The reason they're hiring you is either the person's no good and they've got rid of them,
Right.
or the person's been headhunted by somebody else. They want to replace that person, but they always want better.
Right. There's nothing wrong with saying, this is kind of point 3 really, based on my research and experience, I'm targeting a range of X to Y. Is that in line with your budget? Is that a fair statement for me to make?
Yeah.
Okay.
Yeah.
Position yourself. This is interesting. I wondered what you were going to. I've been wondering what you're going to think about this. Position yourself for the role, not your path. Your current salary doesn't define your future value.
Yes.
Okay. Frame your expectations around the responsibilities and impact the new role requires, not just what you were paid, before.
Yeah. Because in reality, people don't move jobs to do the same job. You move job to move up, to get better, to be more challenged.
Yeah.
And with that comes an increased level of responsibility, whether it be financial or managerial, whatever. And then you are deemed to be paid more because you're more senior. And your goals then are aligned to the company. And somehow you've got to get your financial compensation aligned to the company, not just the bonus, but how you're going to move up to the next level beyond this. One of my questions I always say to candidates, if a company says to you, why are you interested in this role? You said, I'm interested in this role, but I'm not just interested in this one. I'm interested in the one above this. Because I see real scope in this role to move into a different area. You're already seeing you want to stay with that company, you want to grow. Your natural value goes up.
That's a good way to put it. But don't do what I do and say when somebody says, so why do you want to do this? Well, I don't really. I was more interested in that department. I did that once. I remember thinking, did I just say that out loud? It was real.
I had a really interesting, I got interviewed about 10 years ago for a chief exec's job in UK. I was thinking of going back to UK and my business was going to run itself. That was a disaster. And we went through the whole process, and I really liked the person interviewing me. The chief exec who was leaving was fantastic, motivated, driven, and I loved the opportunity. And at the very last interview, I was having a coffee with him in London. I said, "Why are you leaving?" And he said, "Probably don't want to tell you that." And I'm like, immediately red flags.
Yeah.
And he said, "It's because of the board of directors. I don't like them. We never get anything signed off, and I feel like I'm not empowered." And I'd met the board of directors, and I liked them individually, but I was concerned about them as a collective.
Right.
He made me turn that job down.
Ooh. Okay. And you would have been working pretty closely with the board of directors, I'm guessing.
I reported directly into them.
Right. Okay.
But and you know what I did?
Yeah.
I then had my final meeting again. Once I'd had a chat with him, was with the board of directors, and I told them why I was turning it down.
What did they say?
They were really good. They actually said, "Yeah, this is an issue we have, and it's not just him; it's us as well. We are not agreeing on the future of the company. That's why we need you here, because you're a stronger character than the person that's leaving."
And did that make you feel good?
Made me feel amazing.
Yeah, I bet it did. But you still didn't take the job?
No, because
The cabbage wasn't enough.
No, but also things had changed here, and then the person I'd come in to be my MD had failed. So I had to come back here. So, yeah, was it a sliding door moment? I'm not sure. I'm super happy doing what I do now. So I would have missed this sitting with you and Faraji.
Yeah. Well, there's always a bright side.
Not sure what that is, but
I'm not sure. I'll just leave that hanging.
Faraji's just not involved in this at all.
I don't blame him. I was trying to sum up, actually. So, ask about the budget in a respectful way. That's obviously an important thing to do. There's something else that I wanted to just put out there. Make it a two-way conversation. You're not just asking for a number. This is a discussion. You're looking at different things. It is. I mean, as much as it's about getting what you're worth and the right package, the right salary, money, you're also looking at fit and value and mutual expectations, and that's what a professional, mature conversation is about. And it needs to be that, doesn't it?
It used to be a dialogue.
Yeah, exactly. That's important. The other thing, after you've stated your sort of requested amount or terms, stop. Don't go on about it. Because there's this thing of, you're asking for a little bit more and you then start to over-justify. I know, and that's something I wanted to come back to because I think that's important. Don't over-explain or justify. Just let it sit there and you're trying to elicit a response.
Human nature.
Yeah. It's hard to do.
I got dumped by a girl once and I tried to sell her into why she should keep me.
What?
I just kept talking. And I remember going, why are you still talking, David? Because I really liked her. I wanted to convince her to stay with me.
And it didn't.
No, it didn't work.
Yeah.
I'm really good at negotiation, so I don't know why I messed that one up. Luckily, because I met my wife. So, but on a more serious note, and I ought to be serious on this, it's a really good point, is know when to stop talking.
Yes.
And if you deliver something like, well, this is what I'm expecting, this is how I'd like it to be structured, what are your thoughts? And if the person opposite you doesn't say anything, just wait. And if they keep doing the power play, just go, sorry, do you want me to go through that again? Or is there any areas you want to ask me about that?
Yeah, and that goes back to, your confidence.
Exactly.
Going in with knowing what you're trying to get, knowing who you are, knowing what you offer and everything else. But that's really hard to do. Because I do that a lot. I'll be in a social situation and then I'll just end up and I'll think, I've just spent 5 minutes talking nonsense, just words filling the air because I didn't know what to say.
Yeah, but that's normal. That's normal.
I'm not sure.
I think it's normal. Well, what you say is probably not, but it's normal human behaviour because people like interaction. I think I've sat on the side of a client the other day that was trying to negotiate with me, and I'm a very open negotiator. I'm very clear about what we'd accept, what we deal with, what fees, and how we want to work. And I said, look, this is the fee rate we'll work out because we haven't worked with you. I need to prove you I'm good enough, so I'll do that rate. And he went, and just stared at me.
Oh, really?
And I said, do you want me to say something else? Or is that not acceptable? And he carried on looking at me. And I said, I don't mean to be rude, but is this a negotiation stance or are you just not talking? And the client went, no, I just, I'm thinking about it. I said, okay. So he sat there for another 10 minutes and I went, look, I think the relationship we have with our clients is a two-way thing. I feel now either we're just not discussing this or you're not sure what to say to me. So
that's awkward.
Yeah, so I said, why don't I leave the meeting and then we can come back and maybe reconvene? And he sent me an email saying, further to your fee percentage, I'd like to take 5% off. And I went, why? And he went, because I think that's what the value of this of what we're doing is this. And I said, that's great. Thank you very much. I do appreciate it, but we're not going to be working with you.
Wow. Okay.
It was a power play, and it was a ridiculous power play. I've not had it for a long time in my industry. Most of my clients are they're really good people. When you talk to them about an offer, so there's one of my Kirsty's, one of my really good clients. I've known her for years. She's a fantastic negotiator, but she's a kind negotiator. And let me say what that means. When she's negotiating to accept a candidate, she goes, David, what will this person accept and be happy with? And what would they accept? And they come begrudgingly. And I'll tell her the two figures. She goes, right, give them the one they're going to accept and be happy with because I want this person to come in being positive. She could get them for lower, but she realizes that 2 or 3 grand, the value on bringing something in where people are happy about means that they're coming to the business positive, not, I was lowballed on this, which will always stick in the back of people's heads.
Not that many people like that really see the value.
I tell you
they know the price, but they don't
look at her team. You can tell they're all really good. They love working there. She has very low attrition of staff.
Right.
She treats people properly. She's a very good HR director.
Sounds to me like this person who negotiated in that awkward fashion learned that on some crazy business course or something. That just sounds like a tactic that...
It was a certain type of person, and I deal with them regularly, and they're a procurement person. They have very little personality in terms of being able to have a conversation about it. By the way,
transactional.
Yeah, most procurement. Yeah, that's a much better way of putting it. Procurement people typically are gatekeepers, and they are rising to the fore now in terms of negotiating contracts. So when you meet a really good one, and there's some really good ones out there, it's a really nice interaction. because they're going, no, David, and you go, no, and it comes out, you're both happy. But then you get ones that just want to screw you over, and in the end, we just don't work with those people.
I've had that recently with a procurement person who asked me, I went backwards and forwards, there were, 5 different negotiations. And in the end, I just said, I can't do this anymore. It's just too hard now. And then she said, well, we're going to sign the contract. I was like, oh, great.
But a lot of people lose contracts. Procurement people are ruining some of these contracts because they're lowballing people so much that they have to accept it, and they just get a substandard level of work.
Well, this is a problem, isn't it? And it's also, it wastes so much time. You end up not getting on with the job.
Yeah.
It's been interesting, this, I think. David McKenzie is I've got a new one for you. He's the Alpha Bigwig. Mackenzie Jones, not bad. Better than the Belgian Malinois. But, there you go. The horse one still wins. If you're enjoying today's discussion, make sure to share it. Leave a comment. This is Mira Business FM. David McKenzie, I want to ask you, we've been talking about how to make sure you get what you're worth in return for your work. In other words, the cold, hard cash, right? Mm-hmm. Essential questions to ask at every stage of the employment life cycle. And I've categorized these by when they might be most effective. So I'm going to make a few more statements, okay?
Go for it.
Imagine you're at a screening interview, okay? This is kind of the initial stages of the new role. And I think of this as maybe, aligning the budget to an extent as well, because I'm still thinking about we need to get what we want. The goal here is to ensure you aren't wasting time on a role that can't afford you without pricing yourself out too early, right? That's your first kind of thing. Mm-hmm. What about this? Could I say something like, to ensure we are structurally aligned, would you be open to sharing the specific compensation range budgeted for this role? Maybe not in those exact words, but
Well, you just fumbled English then. I mean, just be honest, yeah. Can you tell me roughly what the package?
Can you tell me what the package roughly is?
Just so that I know. I think that's exactly right. But do it in plain English. Do it right. Yeah, as we normally talk, because I think overly complicating things.
I crafted that sentence for hours as well. Just doesn't appreciate the word.
He was so pleased with that for us.
I was. Sorry, I've even italicized it in the notes.
I destroyed that, but you know what I mean. It's simple works.
Yes.
You don't need to overcomplicate in a very simple sentence. Okay. But I agree. Good.
But see, I think it kind of shifts the burden of the kind of initial number back to so that you have an idea. Does the range for this position, I'll simplify my italicized quotation here, include a performance-based bonus, or is it just focused on base salary? Can I ask that?
You're getting into real detail very early on.
Okay.
I wouldn't do that.
Wouldn't?
No,
right.
Because the problem is then you're going to go, what sort of health insurance does it cover family? Is it VIP? You get into real nitty-gritty when the person hasn't bought you yet.
Okay.
They haven't liked you yet. Okay. They don't know if you're any good. So if a recruiter comes into me on the first interview and goes, what are you paying? I immediately get put off by that person, because your job is to sell yourself in that beginning of the interview. You've got to tell the interviewer, you cannot afford not to have me.
Okay, that makes more sense. Okay, so don't try and nail down too much in the first interview, you're saying. Okay. So what about, say you have the next interview, the kind of the deeper dive?
Yeah, so first one's typically HR, second one is line.
Right, okay. So this is the line interview. Once and at this point you kind of think, well, I'm a more serious contender. This is, I'm actually up for this now. So you need to understand a little bit more about the company, how things work, how money moves in the company, how maybe your performance will be tied to financial growth, all of those good things. What about this as a question? What are the KPIs that dictate successful salary review in this department?
Nope.
Don't do that.
This is the wrong stage. Why would you not do that? Because this is like a meal. The hors d'oeuvre is the starter when you meet HR, and they get a taste for you. Are you the right type of person? Do you culturally fit? Are you on the right package parameters?
Okay.
This is the meat, this is the juicy bit where you've got to convince the person on the other side that you're the best person for this job.
Right.
So you've got to be selling yourself. This is what I'm good at. You obviously have to ask the questions, what they're looking for, all those things. What are the key goals for this role? How do you see success? where do you think I would succeed in this role? That's a great question, by the way, because that means they've had to have read your CV and they can go, well, actually, you did this at Mackenzie Jones. Could you replicate that here? How would you go about it? So you then start getting into the almost simulation of where you're actually in the job. So you shouldn't be in this second meeting talking about money, about details or anything like that. You should be talking about how you are the best person for the job and tell me more about the job so I can reflect what I've done in this job.
Right. I'm with you. Okay. So that leaves me. I've kind of shot my bolt too early here, haven't I? Really, as it were. I've gone about this completely wrong. So in terms of the interviews, the initial, the line, money doesn't, not in any meaningful way, doesn't come in until that a little bit later.
No, so money is talked at the very beginning and the very end, nothing in the middle.
Nothing in the middle.
No.
So this is, the point here is this is all about your value, what you can offer the company rather than what the company shall offer you kind of thing.
Well, think about it in a slightly different way. You're going to an interview with an HR person who is probably not the line manager, so is not responsible for the budgets or the outcome of this role.
Okay.
So the HR person wants to know the details about you. Are you married? Do you have kids? What have you done in your job? How have you done it in your job? What are your reviews like? And what sort of package are you looking for? So they find all the sort of nitty gritty in the beginning. The next stage is when you are there interviewing with the person that you would typically report to, or a decision maker, what they call DMU, decision making unit.
That's such a great acronym.
I know, it's like a Skynet one, isn't it?
That's proper.
Okay. So once you've done that...
Carry on, I'm just going to write that down, DMU. Okay.
Excuse me, I'm coughing. I've got a cold. I do apologise.
Oh, you're fine.
So then you've got the last stage, and there may be two last stages.
Right.
So what happens is when you get to the first stage, the HR interview, there might be 6 or 7 people in that process. She interviews. The next stage, there might be 3 or 4 people in that stage. And then the dessert stage, if we can use the meal analogy, the final stage or the final but one, you might be down to 1 of 2 or 3.
Gotcha.
This is when they start asking the really deep questions like, what would you do in this situation? Give me an example where you've overcome this objective. And then the final stage is when you typically sit down with line or HR and you discuss, right, what are you looking for longer term? What are you looking for in terms of the role? We discuss package, break down your package a bit more details. What are you looking for from us? When are you ready to start? What's your notice period? All the bits when they've gone, right, we think you're the right one. And there may be 2 of you in that process, by the way.
Right.
So it's still an interview. So one of the things people get to the last stage and they think it's a rubber stamp. Be really careful. You must always be on your guard every stage of the interview process.
That's good advice. So you're still competing?
Always compete.
Yeah,
Even if you're one of one, you must make them 100% sure you're the right person, because if you meet sometimes what they do, they get you to meet the chief exec at the last stage just for cultural purposes. It might be a 10-minute interview. How many people I know have messed that up and not got the job because the chief exec's gone too cocky, didn't come across well, didn't like him.
Do you know what? I have a particular example of that. I remember that. I was in a place, it was 3 interviews, and the final one was the big cheese, the big boss.
Big kahuna.
And I remember somebody didn't get a role because she yawned in the interview.
Yawned?
She yawned. Yeah, I think it was just like a nervous, more like a catching a breath, but that I understand.
So if you do something like that, or you like me, cough, sorry, I'm coughing at the moment, I do apologise, do that, say, I'm really sorry, forgive me, I've got a 2-year-old daughter, I wasn't asleep last night, I really apologise for that.
What if you don't have a 2-year-old daughter?
Yeah, make it up. No, don't make it up.
Don't make it up.
Rubbish. That's absolutely no. Just say I'm really apologise.
Yeah.
I was really looking forward to the interview. Didn't sleep much last night. You probably don't need to know the detail, but I really apologise.
So why didn't you get to bed early last night before the interview, Mr. Mackenzie? Says the chief executive.
I was swatting up on your company performance.
I was reading your balance sheets.
Yeah. I was preparing for this interview and I was looking at your profile. I've seen what you've done. It's a great segue into talking about that person. By the way, always ask. So when I met the chief exec of a company the other day, I didn't need to meet him. My client wanted me to meet him for some inexplicable reason. And I knew a day before who I was meeting, so I did loads of research. And I found out this guy was a triathlete.
Oh, here we go.
Sorry, I was a triathlete. I didn't spoon this in immediately. We chatted away, and he said, "Oh, thanks for coming along. What do you think about the company?" I said, "It's great. We want to work with you." And he said, "Any other questions?" I said, "Look, this is a bit of a personal one. I see you did Kona. How did it go?" And he went, "You're a triathlete?" And I went, "Yeah." We had a half an hour conversation about being a triathlete. I walked out of the meeting. The HR director said, "I don't know what you did, but he loves you."
Wow.
And that wasn't just about business. That was about engaging with a human being on a different level. So every person you meet in the interview process, research those people. Find out what they do socially. You might not, if they've got 2 kids, don't bring in, "Oh, I know you've got 2 kids." Could be a little bit creepy. Just try and edge in a bit about something they're interested in. There's a mutual interest in it.
Yeah, don't shoehorn it in, but if there's a suitable juncture, then do it. How much can you ask somebody if you think an interview is going well and it's appropriate? Is it appropriate to ask, to pick up on something that might be personal in that corporate or professional situation?
I wouldn't do personal. What I typically do is if I'm trying to remember when I was interviewed years ago, one of my interviews was we were getting on very well, and I almost knew that I was probably one of their favorite candidates.
Right.
And he said, "Have you got any questions you want to ask?" And I went, "Yeah, tell me about your career here. You've done very well.
Okay.
How did you work it here? How did it become successful? How did you know this was the right business for you?" You're then turning the interview around. They're selling to you why you should come and join. At that point, you're pretty much going to get that role, or they like you.
That's also not too personal.
No, the thing is, if you talk about family, or the worst thing is, I remember one person, because my wife does reflexology, and I was interviewing a candidate for a job, and he goes, "Oh, I know your wife," and I went, "Oh, that's very nice." And he went, "She did my feet."
Oh.
And immediately I was like, "Yeah, that's a bit personal."
Yeah, a bit.
Now that's her profession, by the way. That is her job.
No, it's fine, but the phrasing's odd.
Yes, and the very nature they try to interact with you on that very granular level is not good. So one thing, I interviewed a potential recruitment consultant the other day, a PRC. Did you remember that?
I'd forgotten that. Oh, just before we go ahead, DMU, right? Decision Making Unit.
Yeah.
David McKenzie Unit.
That was absolutely...
It's nothing to do with anything.
Actually embarrassed by that.
But I know, but I looked at it and I thought, that's a crossover. I can't ignore.
Let me finish this last bit.
PRC.
So I interviewed a recruitment consultant, and he said to me, I asked about his family, what his wife did, what his kids do, and he said, "Oh, I noticed one of your sons is a Marine." And I went, "Oh," and he goes, "How do you feel about that?" And it was a really nice sort of, because he said, "I've got 2 boys, I'm not sure I could cope with my kids being soldiers." And it was a really nice segue of getting me into a personal conversation. And he did it really nicely. It wasn't too intrusive. It was a very nice way of showing he'd actually researched and he cared a bit. I really liked it. And he didn't keep going about it. It was really good. He just went, "Oh, fair enough. I wanted to ask you that. Hope you don't mind."
That's exactly what I was thinking, because that sounds like somebody who's genuinely interested in your response because they don't know how they would feel, rather than, "Oh, I could do that, and that would be a device," and then you overcompensate.
And you know that.
Exactly.
The thing is, I always ask what somebody's husband or wife does as a job. That's not me being personal. It's understanding about their financial economics.
Okay.
Because typically then, if somebody's taking a salary move, or they're going down in a job, or they're taking a slightly different move, there's a mechanism for their family unit to still support itself financially.
Right. Okay. We've been around the houses today, I think.
Honestly, your research is spot on. Actually, genuinely, I think what you've come up with there is a really good game plan of how to approach an interview, and I think people really don't do this very well.
Well, I think it's important to make the mistakes talking to you today. I mean, yes. I'm genuinely saying to you, should I do this? Should I not do this? And, you're very direct, said, "No, don't do this, but try this." So that's what's important. I've got a couple more things I wanted to ask you. We've got 5
Can
minutes.
I ask a quick caveat? I'm not always right, by the way. So that there'll be instances where you go, "David said this, and actually I don't feel this is the right thing to do." Always go with your gut feeling.
Right. Okay.
Because you hopefully will have thought about it and you will have researched it. So if my advice doesn't work in that situation, doesn't necessarily mean you're wrong.
Well, if you've researched the situation and you know that you offer value and you have the confidence, then you're probably a person that's going to go with your gut anyway. You kind of know where you're headed. But that's a fair point. I mean, this is all. It's very easy to reflect on how you might do something. It doesn't.
I've done some bad interviews as well.
Oh man, don't even start me. We should do it. We could do a few hours on that next week. It's Eid.
I'm here.
Yeah, well, okay. Same time.
You were hoping not to be.
Same place. Farage, get ready for a long one, as it were. So we're in the post-offer phase now, right? The full package. Okay. Once you've got a formal offer in hand, that means you've kind of got the leverage.
Yes.
Okay. So is it fair to sort of think this is the time to look beyond the base salary? So, total compensation, base salary, allowances, bonuses, perks, whatever is added on top.
Yep.
So is this the time where you can ask for a breakdown of everything?
This is where you go.
This is where you get you're granular. Right.
So, healthcare, who's it with?
Yes. Yeah.
What is it, VIP? Does it cover my family?
Right.
Are the flights included? What class are they? How's the bonus worked out? Is it worked out my basic or in my package?
Right.
What's my notice period? Is there phone allowance included? Is there laptop? Is there working from home? Is there flexibility? Can I work for a month in Europe during the summer? Go through all of those details because you'll be talking to HR. HR should tell you these things anyway, but really go into real detail about stuff.
But this is time to really understand what's being offered, isn't it? Yeah. Right, okay, that's good.
And that shows that you as a candidate are really interested in this role because you are breaking this down because each part of this package may make a difference to you.
And I guess as well, if you're in the UAE, allowances make up a percentage 40%. Of take-home pay, and everything else. So you really need to understand that, and it affects end-of-service gratuity and all of that stuff as well. So that's important to get sorted. Could you say something like, assuming this is how you feel, is there any flexibility to adjust the base salary to the target number? Is it too late?
You can
for
do
this?
anything in this meeting.
This is the time to do this.
This is
okay, to better reflect the scope of the project we've discussed, or however you want to phrase it.
Can I increase my basic because it'll affect my gratuity?
You can do that. Right?
Absolutely. Be honest.
Okay.
You're not doing it for nefarious reasons. You're doing it because, and the more honest you are with an HR person or the person negotiating your package, the better it will be. If you say, I want flexibility because I've got to be honest, on Tuesdays and Thursdays, I take my kids to school.
Right.
So I just need a bit more flexibility in the morning. Is that okay? Just start being honest with people about it. If you start saying, well, I need 2 months off in the summer.
Yeah. No, I can understand that. So, polite, firm, but
negotiation,
honest, and it's a two-way street. What about this? If the base salary is non-negotiable, okay, would the company be open to a sign-on bonus or an accelerated 6 months performance preview?
Absolutely.
Review?
Yeah,
signing. Say all of I thought you'd say no.
No, signing on doesn't really happen as much anymore because that's when there's a rarity of a particular asset in the marketplace or a candidate in the marketplace. What is more and more common now is to say to a client, okay, I understand you can't give me my exact basic now.
Yeah.
How about we stick in or we put together 5 KPIs that I have to hit during the year or 6 months, and you raise me to the figure I wanted? Because what you're saying to the company is then, I'm that confident I can increase the value of your organization by me being there. Set me those targets, which by the time I hit those targets, that increase of 50K will just be absolutely acceptable to you.
Okay.
Because I've proved my worth.
Yeah. And that's the really important thing. It's knowing your value, doing your research before you go in. That's the sort of big takeaway for me today. I was going to add, because we've been talking about prospective employees. We've been talking about joining an organisation for it seems to be an interminable length of time. It's been quite long. But I was going to add at the end of this for current employees, promotions or reviews.
Same process.
Very similar process, but I'm going to leave it because I want to add a few bits and pieces to it because I think there's probably a longer conversation for another time.
Is this like Mission Impossible Part 5?
Should you choose to accept it, David McKenzie?
Love it.
That's what we'll do next time. But I think there's more to say there. There was one more thing I wanted to add: the golden rule of the follow-up. Okay. And there are a couple of points I wanted to make. After you ask any of those kind of high-stakes financial questions, the thing to remember, and I think this is so important, we've said it already, stop talking.
Mm-hmm.
Let it sit, let it fill the silence. Resist the urge to over-explain or justify personal rent costs, whatever it is, or fill a silence.
Don't bring that bit up.
Yeah, exactly.
Who cares what your rent is? Because in all honesty, it's not a company's responsibility that your rent goes up.
No, it's nothing to do with it.
Exactly.
But very often it's the first thing in mind. It's like, oh, my rent's gone up and I need to have it. And that just smacks of desperation.
Yes.
So you need to let the employer answer, I think. And maybe silence is where your leverage does its best work. I don't know. But that was the thing. All right. That's pretty much it.
Awesome.
Thanks for that.
A pleasure.
I appreciate it. That was that. It was genuinely interesting. David McKenzie is the MD. He is also the Padrone of Mackenzie Jones.
Nice. I like that.
Thanks
That's almost
very
as
much.
good as Warhorse.
Nothing's as good as Warhorse. But
Do you know what?
I'm trying to get to those lofty heights.
I found it on the Netflix box the other day, and I thought, I've got to watch that now.
You do. You're gonna be, no, you're not.
No.
Good to see you. Appreciate you coming in. Happy
Thank
Eid.
you. Thank you very much, and to you.
As always, don't forget to like and to subscribe for more interviews like this from Mira Business FM.
Mira Business FM. Mira Business FM, Dubai's home of business radio.
It's Mira Business FM. It's the morning drive. Saudi Arabia is seeing a major rise in new business activity, particularly across tech and finance and construction and the manufacturing sectors linked to Vision 2030. The kingdom has also issued 188 new industrial licenses. This was for the month of March 2026, driving over 1.81 billion Saudi riyals in fresh capital into the kingdom. So continued momentum in investment and development. So plenty of questions to ask. What's driving the surge? Where is investor demand strongest? And what does this rise in business activity say about confidence in the Saudi economy? And more. Hopefully to answer those, James Elliott Square is from Sovereign PPG Corporate Services and joins me in the studio. Good to see you.
Nice to be here. Thank you for having me.
Big long introduction, lots of questions to ask you. So it's going to be quick fire, relatively speaking. The thing about this, James, is March was clearly a pretty big month for the kingdom from a tech, manufacturing, specialized finance. It's a pretty full pipeline. Are we looking at a temporary spike here, or is this like a new baseline for business activity?
I would say on a high level, a baseline.
Right.
You don't set up a license overnight in Saudi Arabia. However, we've seen an increase trend on a more than a linear scale, a significant increase.
Significant upwards.
Over the last 6 months, year, 18 months. It's continually increasing every month.
What's driving it? What's behind it?
I think you hit the nail on the head. Vision 30, having a vision and a concept and understanding where you want to go gives confidence in the market, and any confidence in the market drives. We've got the premise and the understanding of what the UAE have done, and then over the last 5 years, with Saudi getting their ducks in a row after COVID, making it easier to get into the market, they've seen a huge increase alongside sovereign investment. They've got the stability there, the confidence is in there in the market, and they're not just oil driven. They're now diversifying into lots of different markets.
Let's delve into the figures a little bit. I mentioned 188 new industrial licenses in a single month. I think 78 new factories actually turning on machinery, if I'm right. So when you look at the pipeline at Sovereign, what specific structural triggers are driving the speed of the transition? You know, going from the plan on paper, if you like, to actual physical manufacturing.
Well, I think it's a long-term game. Anybody looking to go into Saudi Arabia are certainly not looking at the short-term gains, and that's why I think we're in a strong position. I say the proverbial Saudi Arabia are in a strong position because they're not looking just to quickly get a company on board into Saudi in the next month. They're looking at, as I said, the 2030 vision, which has been there for over 10 years. And when you're looking to get into Saudi Arabia, you've got to look at so many different factors. So it's probably a 1-2 year concept rather than, right, let's pull the trigger.
There's a feeling to me. I mean, we talk a lot about make it in the Emirates here, and it seems to me there is a similar shift in Saudi. So, you know, moving away from kind of the standard light assembly to the more heavy tech-enabled domestic production.
So there's intricacies around industrial. So in Saudi Arabia, compared to, let's say, the UAE, where people might be more familiar with, the wholesale trading part is actually quite hard to get into. It's quite a high bar to get into Saudi Arabia. Why that's being kept is several reasons, but one of the main reasons is they want investment in country. They want to be dependent on themselves, not elsewhere. So they're trying to drive investment into the country through industrial means. They want foreign companies there to build their factories, to invest in the country, so that the equipment, whatever they're manufacturing is there in country, and they don't have to import it.
You mentioned Vision 2030 and made the point that it's a decade old, isn't it now? But it feels almost as though it's being viewed through a new lens at the moment. There is such an investor focus on Vision 2030. Am I reading it wrong? Is that?
I think it's a combination. I think where you start is you have an ideal, and that vision never stays still. I think they're always evolving. I think we've seen that in some of the projects that are happening. Some of them have been maybe shortened and become a little bit smaller. Others have kept where they are. Suddenly, the World Cup 34 is in play as well. That's going to drive a lot of interest into the country, not just investment, but long-term vision. So there's a lot of excitement there. The vision of 2030 in itself was the precipice of starting, and they've evolved along the journey. They've made things easier to invest into the country. They've made a lot of incentives to come into the country with big projects or awards. So initially, money probably drives it, and then when people are from abroad and see the opportunity as well, there's not just a short-term solution. It's actually, we need to be there long term, because there's a real good opportunity to come into an emerging market, let's be frank, even more emerging than, let's say, the UAE, which has been around for 50 years, or say 25 in business. There's a real opportunity to get your foot in the door and start making inroads in the Middle East.
So there is. And, the World Cup in Saudi is just 8 years away. That's kind of next week at this point in my life. That's how I see it anyway. So Vision 2030 casts kind of quite a wide net, right? But money, I think money behaves mechanically, right? It goes where the path is clearest and where the yields are at their highest. Beyond the manufacturing boom, where is the pipeline showing the most aggressive demand at the moment? Is it a pure tech play? Is it infrastructure, plumbing, as they term it?
I've seen over the last 2 years specifically, AI and technology
Sure.
is huge.
Yeah.
Now, wherever you go in the world, it's exploding. Okay, maybe I shouldn't use that term right now.
We can edit that. That's fine.
I've also seen a big influx in real estate. Now, foreign investment is being allowed in certain areas in Saudi Arabia. It's not as wide as the UAE. Obviously, the UAE real estate market since 2003 has been freehold in many areas. In Saudi, it's a little bit more limited, but it's opening up. So we've seen more real estate companies coming in, brokerages and developers. So there's no one sector, which is exciting.
Right.
Now you've got to also appreciate Saudi is such a larger country than the UAE.
It's easy to forget that here, isn't it?
It's very easy to forget it. You know, you've got a 30 million plus population, 65% as a very average figure under the age of 30. So you look forward to 2050 and your population is going to more than double.
Yeah.
So that's exciting if you're a foreign investor because there's opportunity. So what we'll see is we'll probably see a staggered approach where we're seeing a lot of consultancy initially because of obviously the projects. We're seeing a lot of consultancies because the government wants to make sure they get things right. We're now seeing real estate. We're seeing obviously tech. And alongside that, what we're going to see probably towards 2030 is more retail, more wholesale, because you're going to need to be able to fund all the people coming in, whether they be foreign or they be local.
Broadly, in terms of industries, where's the strongest growth right now?
I would say technology.
Really?
Yeah. I've seen a lot of AI. As most of us will know, AI is strong here. There's a lot of investment. There's a lot of the technologies that are coming out of here and raw materials. Oil is obviously a big factor of that as well, having the cash flow to be able to do that. So yeah, I would say technology is probably the big one, but there's quite a few others closely behind it.
Okay. It's interesting, the data center thing, isn't it? Because they don't last very long. So it's this consistent approach that's needed. How that works, we wait and see. How important are the giga projects and infrastructure spending to trends at the moment? Much in the news.
I mean, they were critical initially.
Yeah.
Critical. To be able to get the buy-in by foreign investors, you had to create a buzz, an excitement.
Sure.
And I think the confidence is still there with the giga projects. They are being built. We're seeing with the Lime project, etc. Neom, it's happening. With 2034, with the World Cup as well, that's happening. So when you announce a project like that, if the confidence goes from that, everything else falls down. It hasn't. If anything, it's got stronger, and we're seeing that with the buy-in from foreign investment, where all around the world. By the way, we've got companies from America, the UK, Europe, Asia, Hong Kong, China. They're all investing.
People still buying into that vision. I mean, that's interesting to me. I don't follow Saudi as much as perhaps I should, but I read the news. I look at the question marks over some of the giga projects. That's an interesting statement, I think.
It is, and you've got to take things with a pinch of salt sometimes.
Sure.
And you've got to say, right, okay, look at every different angle. But what we're seeing with both interest, but also concrete interest, with actually people putting their money where their mouth is and investing, because it's not a cheap process to set up, and also you've got the ongoing compliance you've got to consider as well. So it's not just about dipping your toe in the market or in the water. And like in the UAE, you could probably set up a small free zone company here relatively cost effectively. And if it didn't work out, you could pull back out. Whereas in Saudi, that's why I say it's more of a long-term approach. You do your research.
It's more of a commitment, isn't it?
You do your research. You make sure that's what your vision is for your company, and then you go fully in. You don't just test the market.
Do you think there's a realization that it is a more realistic vision in terms of the giga projects now? Do you think there's a buy-in to that?
I think that's hard for me to say. I think there's
But anecdotally, that's...
Yeah, I would say that was the reason why Saudi itself boomed. Bringing the foreign investment in, allowing to own 100% foreign ownership in, 2019 with the old Sajia, and now it's Misa. They made the process easier to set up. That drives confidence initially. Then when we saw the announcement of 2030 and the giga projects, people got excited. And then when they saw it actually happening, confidence was given.
Are more international companies choosing Saudi as a regional base?
So the RHQ project, regional headquarters, was driven nearly 2 years ago. It came into effect, and we've seen a significant increase of RHQs to be able to be awarded tenders, and that's really important differentiation. It was a costly process to do that, and because of that, it sort of filtered out the serious and the non-serious. You had to be pretty much in a place of enough revenue to make it worthwhile. The projects need to be enough value to make it worthwhile to come in as a regional headquarters. But the serious companies we've seen have taken that the bull by the horns, and they've gone for it.
Okay. If you just joined us, this is Mira Business FM from Dubai. We're talking to James Elliott Square, who is the Commercial Director of Saudi Arabia for the Middle East, actually, for Sovereign PPG Corporate Services. What does the rise in industrial licenses tell us about the economy in Saudi, James?
It says that there's enough space on the floor.
Okay, good to know.
No, so there is the difference between Saudi Arabia and, let's say, the UAE is they've got so much more space, right? So they've got designated areas for industrial purposes. So they're not having to, if you compare it to, in the old days in the UAE, you look at Al Quds, there's a lot of industrial there, right? Whereas in Saudi Arabia, they've got areas, specific zones, areas where you have to take industrial space. You can't go into the middle of Riyadh, for example, and then have industrial parks. So that's good. What it tells us is that there's confidence in the market. I keep using that word confidence because I think that's huge in an emerging market. It shows that there's money there, and it shows that there's enough people to actually buy the products that are being made.
And it's easier to launch a business. I get that there is still red tape and it takes more time, but it is becoming easier, isn't it, to launch a business?
For sure it is. When we go back to, let's say, 2018, 2019, when Sajia was first coming into play, it was a lot more tricky to navigate. When COVID came about, which is obviously not something we like talking about too much, Saudi Arabia, I think, came out of it glowing. They brought the government departments together. They got their heads together and they got their ducks in a row. And when they came out of it, it was chalk and cheese. Suddenly, we were able to know the process, explain that to a foreign investor in layman terms, and that's critical in my opinion. Being able to explain it to someone and understand, right? Okay, this is the step process, and it's not vague. It's pretty direct, pretty transparent. Yes, it can take time because in an emerging market, there are going to be nuances. It does take time, but it's understandable, each process. So it's something that when you're looking to, let's say, go into industrial compared to trading or compared to a professional service, you know the step plan for what you need.
Okay. It's remarkable how well this region came out of COVID, I think. UAE, Saudi Arabia, across the Gulf. What sectors are expected to grow fastest through let's say the rest of this year? What do you think?
But I think you're touching on that. I think that's quite an important point. Why did the Middle East come out of COVID so well? I think that's with a vision, understanding where you want to get to, but also being able to make decisions quickly for the betterment of the region. Whereas if you look at the Old West, well, I don't want to get into too much geopolitics, it takes a lot of time for change. Whereas here, we can make decisions quickly.
Well, that's the point, isn't it? I mean, if you take the example of where you and I are from, things never seem to change. We kind of rehash things, and then one bunch undoes the rest of, So I get that. No, it's a decent point to make. What was that? Yeah, what sectors are going to go fastest for the rest of this year, do you think, in Saudi?
Technology for sure is going to continue to boom. Right. Real estate is going to gain more and more confidence, and I wouldn't be surprised if they bring out some more rules to make it even easier. They obviously have to be careful in certain areas of Saudi for religious reasons, like Medina or Mecca. But apart from that, I think they're going to be opening the book a little bit more to get more foreign investment. I think those are the two big markets. Industrial will continue for a steady increase. I would have thought. Cybersecurity is always at the forefront of your frontal lobe, because you've got to make sure that whilst you're doing technology and AI, you've got to make sure that you keep everyone safe. Now, there's a lot of financial companies coming in as well, regulated with the CMA. So then cybersecurity that also comes hand in hand with that.
Sure, particularly at the moment as well. Let's use the word that you've used a few times in this interview, that word that begins with C, confidence. Investor confidence, stronger than ever, I think, probably fair to say.
It is, because I think it's a long-term vision.
Yeah.
We're not seeing the uncertainty in the market. There's a clear vision of what they want to achieve and where they want to go. And a clear timeline on it as well. It's why we're not seeing, in the regional issues that we've had over the last month or so. We haven't seen a huge dip, because they're understanding that it's 2030, 2034 and onwards, not what's happening in March or April.
Yeah.
So I think that's the key. Is the communication of where we're trying to all go towards, not hoping and crossing our fingers.
That's the key, though, of these visionary goals, aren't they? These plans. It's just common sense, something to aim at.
Common sense, but also they have the backing as well, remember?
Yeah.
So they've got the financial capabilities to back what they talk about. So it's not just talk and no trouser. They've certainly got the trouser.
I like the allusion there. So look, entering a market like Saudi, it's not just about having an aggressive sales team. It's about navigating corporate architecture as well. If you're a founder here in the UAE, or a global founder maybe watching or listening to this, and you think, I want to get a piece of this momentum, this is interesting to me, what's the biggest blind spot in terms of compliance that you may face if you were to try to set up?
I think there's two aspects you need to really consider.
Right.
Okay. The first one is tax. Now, we live in the Middle East, and we are sort of understanding that, or a lot of people's perceptions of the Middle East is that it's tax-free.
Sure.
Okay. So in the UAE, it's not tax-free. Although we pay no income tax, there's corporation tax, there's VAT. In Saudi Arabia, it's even more so. So in Saudi Arabia, the VAT is actually at 15% rather than 5%. Corporation tax is 20%, okay, which is a lot higher, significantly higher than here in the UAE. There isn't any personal tax, but there is also withholding tax. So what you need to understand is, when you come into a market, is how do I potentially get my money out of the market once I've made some, okay, especially if you're a global company. So you've got to take into consideration things like transfer pricing. You've got to take into consideration, how do I repatriate monies if we want to. So that's where tax advice is very important. You really do need to consider that before you enter the market and not get caught short. You need to make sure who's going to file, who's going to do my bookkeeping, because local bookkeeping has to be done in Arabic, okay? It cannot be just done in English. It needs to be done in local currency. So again, who's going to do that for me? How am I going to navigate the portal system? Now, there's a lot of portals. I don't want to go too intricate here, but there's a lot of portal systems. Every government department has a portal, and you need to be able to make sure you are compliant on those, both in renewals and submissions and filings. So that's the first consideration. The second consideration is understanding exactly what you're going to do in Saudi Arabia. Like in the UAE, you have activities, and those activities will determine every single requirement that is upon you for both setup and ongoing.
Some good advice there. The portal advice in particular, how to navigate your way through. James Elliott Square is Commercial Director for Saudi Arabia. For the Middle East, for Sovereign PPG Corporate Services. Been good to talk to you. Thank you.
Thank you very much for having me.
Appreciate it. More interviews, highlights coming soon. Check out Mira Business FM on YouTube, on Instagram, and you can also stay up to date on mirabusiness.fm.
Mira Business FM, your daily guide to the markets, money, and more.
It's Mira Business FM. Good morning to you. This is the Morning Drive. The Association of Southeast Asian Nations, or ASEAN, is an intergovernmental organisation. It unites 11 Southeast Asian states, and it functions to accelerate economic growth and social progress and regional stability. It operates on principles of non-interference and consensus, and serves as a primary driver for regional diplomacy and integration. The headline we're considering today is this: ASEAN's Islamic finance industry has crossed the $1 trillion mark, which highlights the region's growing role in global markets. Joining us to discuss this, Bashar Al-Natur is the Managing Director and Global Head of Islamic Finance at Fitch Ratings. Hopefully we can get to what's driving the growth, where investment's flowing, and what comes next for the sector. Bashar, welcome to the Morning Drive. I think Bashar is having an issue hearing us at the moment. Bashar, can you hear us? Welcome to Morning Drive. Few technical issues at the moment. We'll come back to Bashar Al-Natur, Managing Director and Global Head of Islamic Finance at Fitch Ratings, in a few moments' time.
Mira Business FM, Dubai's home of business radio. Mira Business FM.
This is the morning drive. I think we've ironed out the technical issues, so let's move on. The Association of Southeast Asian Nations, or ASEAN, is an intergovernmental organisation. It unites 11 Southeast Asian states, and it functions to accelerate economic growth, social progress, and regional stability. It operates on principles of non-interference and consensus, and serves as a primary driver for regional diplomacy and integration. And the headline in this regard we're considering today is this: ASEAN's Islamic finance industry has crossed the $1 trillion mark. It's a milestone that highlights the region's growing role in global markets. Bashar Al-Natur is the Managing Director and Global Head of Islamic Finance at Fitch Ratings, and joins me to discuss hopefully what's driving the growth, where investment's flowing, and what's coming next for the sector. Bashar, welcome to the Morning Drive.
Good morning, Tim. Thank you very much for having me.
You're very welcome. It's good to have you on. So $1 trillion is, as I've said, it's a milestone. It's a massive milestone, I think it's fair to say, a threshold to cross. What's fundamentally driving this acceleration in the ASEAN Islamic finance market right now?
Thank you very much. And I think that's a good place to start with. I think it's a fragmented story, although, as you correctly said, ASEAN is a group of countries. But when it comes to the story of Islamic finance, I think each country has its own story. But external. Let me start maybe and give you a little bit of a glimpse on what's happening on the biggest few markets like Malaysia, Indonesia, and maybe Brunei, and talk about others that are non-Muslim majorities. So if you're looking at Malaysia, the drive for Islamic finance has been there more than a decade, where the government had very dedicated strategies to develop Islamic finance on all of its verticals, because Islamic finance is Islamic banks, Sukuk, which is the Islamic bonds, Takaful, which is Islamic insurance, the investment fund industry that is Sharia compliant, and the corporates. So these are the 5 key verticals under Islamic finance. And in Malaysia, there has been concentrated effort to actually drive that industry, where they had Islamic first, i.e. if you go to a bank, they will offer you first Islamic product, and before even offering you the conventional one. And for now, this is why now, if you're looking at the banking sector, you will find more than 40% being Islamic finance and Islamic banking, and they have an ambition to reach 50%, although the Muslim population in Malaysia is around 55%. If you look at their DCM market, i.e. the bond and Sukuk market, you'll find that the Sukuk is more than 60% of the outstanding market there. So they are having concrete strategies throughout, I would say, more than a decade to develop that. Where if you look at Indonesia, which is the largest Muslim population country on earth, the Islamic finance industry, if you're looking at the banking, it's less than 10%, but it's been growing. There you have also government strategies, but they've came to the story more recently. If you look at Brunei, it's more of a local story where Islamic finance is really developing. But if you look at other non-Muslim countries, so like the Philippines, for example, and Singapore. So the Philippines, they've issued Sukuk, and they are targeting the development of the Islamic finance industry because they have part of their program is to diversify funding, and they want to attract funding from the GCC. And part of that funding, because the GCC has significant Islamic finance also industry. So if you're looking at Saudi Arabia, 85% of the bank financing is in Islamic Sharia compliant format. Kuwait, more than 40%. UAE, Qatar, you're talking about between 28 to 30%. So they want to diversify their funding and include the Islamic finance investor. Thus, they issued a Sukuk, although they don't have a Muslim majority. Actually, Muslims are a minority there. Singapore is a key listing destination where they're attracting the listing of Sukuk coming from ASEAN to be listed on there. So as you can see, the dynamics is different depending on the country. But as you correctly said at the beginning, it has been growing, and it's becoming a significant part of the Islamic finance industry globally.
I mean, you paint a real picture of an industry that in some respects is still a nascent industry when you compare it to conventional banking, but there is a huge growth story here. How important is this $1 trillion milestone for the global Islamic finance industry, Bashar?
Okay, I think your conclusion is correct if you're looking at it from a global perspective, but I would not call Islamic finance nascent in the GCC or in the UAE or Saudi Arabia. It
Not
is
at all.
actually the dominant.
No, you're right.
Yeah, but yeah. So for me, you're absolutely correct. The relevance of that is that for the industry to expand further, you need to have not only the GCC, not only the Middle East, but you need to go to the broader pie of the 57 OIC countries, which is the Organization of Islamic Cooperation, which has 57 countries. So this is why I think seeing it expanding, and I think 1 week back we've written a piece about Islamic finance in CIS countries. Before that, we've written about Islamic finance in Ireland, in the UK. So it's branching out, and that branching out is not only in volumes, it's also painting the map in terms of the presence of Islamic finance. And as you correctly said, in some areas it did not yet start. In some, it's at the beginning. It's in some, it's more significant and systemic. But having that branching out, I think, is important, because at the end of the day, there is so much you can do in a specific countries. But if you're really doing the bigger pie, it is going to the bigger pie, then you are really having more importance in the global perspective. The important thing is that the key drivers for each, I would say, country is different. So if I am looking at Islamic finance in CIS or ASEAN or the UK it's very interesting to look at the drivers and how is that really translating into the ground. Of course, in some countries you have a fast growing base, in others it is not growing at all, and in other it's so mature to the extent that you're saying, okay, what's next? So why the GCC important in that equation? Because they're looking outside, okay, where can we invest? Where is the opportunity? And part of that investment is actually in Islamic finance and Sharia compatible, which is growing the industry in countries like Turkey, in countries like UK. So all the Islamic banks in the UK are GCC. They have GCC ownership association. Many of the banks in Turkey have GCC Banks Association. I was last week in Tashkent in Uzbekistan, and there in that area there is interest and engagement. So it shows you that yes, it is a 1 trillion, and if you look at that in the grand scheme of things, it might not look big, but it is around 20 to 25% of the whole global Islamic finance industry. So ASEAN is really, I would say, in some aspects, one of the evolved ones, specifically if you're looking at Malaysia, where they have one of the most evolved ecosystem when it comes to Islamic finance. And I'm happy to say what I mean by that, but it has a lot of opportunities and a lot of also interaction and expansion, not only from size, i.e. the dollar size, but also from the footprint.
I think that's very fair. I think what I mean by nascent is, I think that's a comparison to conventional banking, but I think I mean that more in terms of the opportunity for growth here. And I'm interested in how you see that growth evolving, and whether that comes at the moment mainly from banking, or from Islamic bonds, from Sukuk, or from investment demand.
If you're looking at it from an international perspective, so from an international investor perspective, it's more, to be very honest, the Sukuk side.
Right.
However, you can also have a good case in some countries where they will be interested in investing in banks. But the story in Malaysia, for example, which is the most evolved in ASEAN, is actually a local story. So their debt capital market is mostly in ringgit, and it continues to be that. It does not attract significant Islamic investors from the GCC. Some of that reason is Sharia compliance, the different interpretation. Some of it is other aspects like the volatility of the currency. But there is other opportunities in other countries. As I said, the Philippines issued. Outside ASEAN, in Asia, Hong Kong issued a Sukuk. So it is definitely an investment opportunity, but it has also an organic story where in countries like Malaysia, Indonesia, you are trying to have higher bank penetration. And some of the barriers to entry is the Sharia sensitivity of people saying that I want to bank in a Sharia compliant way that is similar to my beliefs, and that growth is also accommodating that. So I would say some of it is from each country's individual story, and some of it is external. But again, if I may also say, some of it is top down and some of it is bottom up. What I mean by top down is you have government strategies that are trying to push the industry and make it grow. And in many cases, you have also the actual customer demand, the actual local investor demand that wants to invest and bank in a Sharia compliant way. So the drivers are a mix of bottom up and bottom down. In some cases, the top down is higher and stronger than the bottom up, but it's a combination of both. So it's external, internal, and also top down and bottom up.
The report shows an interesting breakdown, Bashar. The Sukuk or Islamic bonds make up nearly half the market. I think 49% was the figure, followed by Islamic banking, 41%, with funds and Takaful, Islamic insurance hold the rest. When we look at the global bond markets, ASEAN is actually driving almost half of all outstanding global Sukuk. And I'm wondering, why has the region, specifically, I guess it's Malaysia and Indonesia really, become so dominant in issuing these physical asset-backed instruments compared to the rest of the world?
Okay, I would say Sukuk, the vast majority is asset-based, as you, alluded to, rather than asset-backed.
Yeah.
They are they are doing that because of they started the story of funding and the development of the capital market before the GCC. So, and I think your question is very important because here in the region, if you're looking at the debt capital market and the Sukuk market and the bond market, it really was a story of more, if you look back maybe 7 years and beyond, before, it wasn't really significant. It was some corporates player, some banks player. Sovereigns are usually absent because they were depending on oil. However, many countries, actually all countries in the GCC, became more interested in diversification of funding. That push of diversification of funding started almost 7 years back. So if we were having a look before that, the actual split and representation of countries like Malaysia was even higher than now. So it's more of the growing development of the DCM markets in the GCC, for example, and other countries that is catching up to take a higher share. And Malaysia's share actually, and ASEAN, because Indonesia is also a significant part in the international market, is actually gradually having a lower share. We still expect it to be significant, and they're still pushing ahead. But the growth in the GCC, in the DCM market, which is bond and Sukuk, and also, of course, the growth of the beyond that, when you're looking at the banking sector, it is there. So the answer is that they started the actual story of the DCM market earlier, thus they have a significant share. The GCC is doing a catch-up, and they are increasing their share. So the Saudi Arabia and the UAE are the most dominant and biggest when it comes to the markets, and they're really catching up in terms of that share. One thing maybe to add, Saudi Arabia and UAE are active in the dollar market, i.e. the foreign currencies, and the local markets. Recently, they started that, where Malaysia is mostly ringgit story. Indonesia has both the international issuance and also has the local currency. So the whole story is really developing, and it depends how fast is each region. And in the past few years, the GCC has been growing at a faster pace and taking a bigger slice of the pie, if that makes any sense.
No, it does. I mean, this is the evolution. I think is really interesting. There's been this move from kind of standalone Islamic banks to mainstream conventional banks launching Islamic windows, but Islamic banks within banks, if you like, to capture the demand. I think that's been an interesting phenomenon, if you like.
Yeah, that's definitely helped in the growth of the market, it shows a business case. So as you correctly and smartly picked up, in some markets, conventional banks are actually allowed to open Islamic windows.
Yeah.
And that is why, so it's not all countries, but in many, as you correctly said, that is an opportunity that shows that you can actually have the Islamic offering under your conventional umbrella, but of course you're abiding with the Sharia, and to take the opportunity of the customers base that is Sharia sensitive, and you don't want to lose them. So that is definitely has been one of the growth drivers in country where Islamic windows are allowed, and that is something that we might see also in other countries in ASEAN and maybe in CIS and wherever Islamic finance and Islamic banking is finding its foot, and it has a customer base and a business case. Of course, we're talking about all the upside, but I have to say that the Islamic finance industry in general has its own challenges in terms of Sharia interpretation, standardization globally, and even within markets, the awareness and acceptance and confidence. So it's not like just a positive stuff, although definitely it's a positive story, and we do expect it to continue that. But there is also some challenges that needs to be crossed, specifically in new greenfield areas that it is entering and venturing into.
The growth trajectory, though, looks pretty phenomenal. I mean, your report flags a distinct mechanical shift in credit quality. 63% of ASEAN Sukuk issuers carry a negative outlook. That's largely due to, I guess, broader sovereign outlook revisions for Indonesia and the Philippines. At the same time, we've got ongoing global tensions, the Iran conflict, for example, that threaten external funding conditions. So, given that, how should an investor balance record-breaking growth against tightening credit and geopolitical headwinds now in 2026?
I think that's a very important dimension, because at the end of the day, the investor is the one with the money. So where is the money? How is the money going? So as you correctly alluded to, and I think that also maybe answers a bit of your first question, what's the importance of growth in ASEAN? You have an area that is a bit far from the geopolitical tensions that we have in the GCC. However, the impact is also reaching there. So yes, in the case of Malaysia, it's an oil exporter. It's not having a big weight. But as you also correctly alluded to, the Philippines and Indonesia and maybe other ASEAN countries have an element of the increased oil prices and an impact, and how is that really impacting the story there? But it gives a diversification angle to the investor to say, okay, can I invest there and or invest in the GCC? I have to say also here that even with the crisis and the tensions that we have, the markets are, I would not describe the GCC markets that are closed because of lack of interest. It is actually the volatility and the uncertainty that is making it difficult for investors to assess how much they need to ask for a premium, and do we have issuers that are accepting to take that higher premium, or they will prefer to wait, and then when things stabilize, they come to the market. In March, we almost saw no issuance coming from the GCC, but April and May is seeing more activity coming out of the GCC. So yes, the market is moving here. At ASEAN, it was less impacted, to be very honest, even if you're talking about the liquidity of the market and the spreads differential in the market, specifically if you're talking about Malaysia specifically. So it's acting in its way, because Malaysia is an oil exporter. It's a local market, so it was very much less impacted than the region where it's more, I would say, ground zero for the conflict currently.
The report also hints, and I'm kind of wanting to look to the future a little bit here, but it hints at the future of the sector relying on building tighter financial bridges between ASEAN and the GCC. I mean, here in the Gulf. We're already seeing Singapore operate as, I think it's the 6th largest global listing venue for US dollar Sukuk. Mechanically, how do we connect these kind of Gulf corridors, the capital-rich Gulf corridors, if you like, with the frontier Islamic markets like the Philippines or perhaps emerging Central Asian states?
Okay, I hope I'll give the question justice in answering. So it's because it's key at the end of the day.
It is.
It is why So for me, let me try to answer that. And I hope if there is one point that you need me to clarify further, please do ask me. So there is a lot of dimensions. So there is the first dimension where you have the investor in the sukuk market. And I think you've cited the example of the Philippines. You will find that when the Philippines issued the sukuk, as the vast majority of the investor base came from the actual GCC. So that is one take.
Yep.
If you're looking at the interest in expanding beyond that, so if you're looking at the Islamic economy, the UAE has signed, for example, 3 agreements with Malaysia, Indonesia, trade agreements, and part of and comprehensive agreements, and part of that is actually either developing the halal industry, the halal economy, and Islamic finance. So even with the Philippines, they have that element in it. And that is something that shows that there is a funding flow also coming from the region, going to there beyond the sukuk and beyond the Islamic banking industry. But it's not only that. The ASEAN side of things is also an investor in sukuk that's coming out of the GCC. So there is also inflows and there is interest from there. When there is instruments that are coming from the GCC, you find sometimes 15, 20, or even a little bit more than that coming actually from Asia in general, maybe beyond ASEAN also, that is also interested to invest in there. So it's a mutual story where you have investors that are interested to go and invest. And the key driver is, do you have a Sharia compliant sensitivity where you can only do investment in a Sharia compliant way? And if you have that, then to be able to cater for that significant investment in the GCC, because the regional investor, if I may say, whether conventional or Islamic, they're familiar with sukuk and they're familiar with Islamic banking. I mean, here in the UAE, in some Islamic banks, 50% of the customers are actually non-Muslims. So it has also its business case and product standing on its own in developed countries. So that is a driver where you are having agreements on the level of governments. You have investors whether interested in investing in sukuk or exploring opportunities in opening banks, Islamic banks in regions that are there. So the mix of all of that is a key driver that we expect to continue in the future and carry this industry to the next level.
You answered the question particularly well, I have to say, Bashar. I am interested, just picking up on one point there. I wonder if you can gauge for me how you view Gulf investment or Gulf investors' activity in ASEAN markets at the moment. Is there more? Are you seeing more activity?
I mean, when we are saying now, I would say, if you're referring to the geopolitical situation and what's happening, that is definitely disruptive to many verticals of investments coming out of the GCC. But of course, depending on the length and the width of the conflict, after that, you will have a more stable picture. So for me, I think these are more of strategic long-term objectives that are difficult to change so you need a actual change in fundamentals to really deter the investment appetite towards outside the GCC, and ASEAN is part of it, CIS is part of it, and other countries, of course. Because at the end of the day, if you're looking at the GCC, the banking system is in some cases even overbanked. And if banks wants to grow, they need to look for opportunities. And looking for opportunities, it will be then outside the GCC. Yes, some other Middle Eastern countries, it could be Africa, it could be ASEAN, it could be CIS, it could be the UK, depending on the case that you have. But looking for investment is something that is going to continue to be there. And of course, the investor appetite, it's risk and reward. And in the case of Islamic investor, it's risk and reward and Sharia sensitivity. That is not going to change. And so I think it is going to be there more on the medium, long term, regardless of what we're seeing now, as I would say, a short term and volatility and uncertainty.
What in terms of risk, what are the biggest risks facing the sector at the moment?
Of course, each market has its own story in terms of risk. So you could argue, but I think if I am looking at one general risk that is across the board, I would say it is the Sharia standardization.
Right.
Actually, it's the Sharia lack of standardization. So lack of standardization of Sharia, i.e., how does Malaysia interpret Islamic finance? How does the UAE interpret Islamic finance? it's a barrier to entry in many cases. Because at the end of the day, if the higher Sharia authority in the UAE, which is under the central bank in the UAE, says that Islamic banks cannot do this, then it prevents them from entering into the market. Lack of standardization is three dimensions. So the first one is local. So in some cases, you don't have a centralized Sharia body, even on a local perspective. The other dimension is regional. So do we have standardization, at least in the GCC? And the actual answer to that, to some extent there is, but also another extent there is lack of that. And that is also one of the limitations of growth, because you will have a transaction in Saudi Arabia that has a syndication, and that syndication will have one conventional tranche and two Islamic tranches, because one Islamic bank in Saudi Arabia says this is Sharia compliant and the other not. That's they have to do too. And that's on a country level, let alone on a regional level. And the global level, there are institutions that are trying to do harmonization and standardization, but the adoption is something that is lagging behind. And the actual interpretation of each, I would say, country differs from one another. So that is the key element that we're looking at. But if you're looking from a credit profile, more than 80% of the sukuk that we rate is investment grade, 20% is actually non-investment grade, speculative grade. It has a similar, I would say, composition compared to any sector generally that you see in the conventional side of things globally. So the actual split from a credit perspective is there, but you have always the element of Sharia compliance, Sharia interpretation, Sharia standardization. That is something that needs to be addressed not only in the conventional side of banking and conventional side of sukuk, but also as we are embarking on AI and digitization and tokenization and all of these. You need, yes, the regulatory frameworks, you need the infrastructure that allows you to do them, but also when you're doing it, you want to do it in a Sharia compliant way, you need the Sharia clearance to be able to enter into that. So it is something that is becoming, I think, more critical to the growth of the industry. Are they able to cope and have the Sharia enabler to go and venture into these aspects that are becoming more and more visible, AI, digitization, tokenization, et cetera, et cetera, et cetera.
Can I ask you about that? A very simple question, actually. To what extent you see digital banking, digitization, tokenization, AI, all of the tech enablers, if you like, how do you see them reshaping Islamic finance in its current form?
Okay, so let me split that into two major aspects. The classic digitization, which is digital banking, online banking, phone banking.
Sure.
And I think in regions where Islamic finance is active, like the UAE, it is at par and in some cases competitive to the conventional one, where you can access your Islamic banks and get all the services that you want through online banking or phone banking or what have you, or mobile banking without a disruption. That element in developed markets is at par and even competitive, I have to say. In other markets, it is not, but the core market is here. But if I go beyond that, so if I go to the more, I would say, not classic, exotic type of digitization, fintech, when you're talking about tokenization, when you're talking about cryptocurrencies, when you're talking about the more, I would say, AI related and blockchain related development. The Islamic finance industry has been growing in many countries, like specifically in the GCC, at a faster pace than the conventional. This is why it is growing in share. Now, if the conventional starts adopting some of these and the Islamic finance industry lag behind, there is a real risk of the opportunity of really maintaining their competitive edge. So for me, it is more of, are you going to be able to cope up and catch up with whatever is doing? Are you going to be leading, in some cases, if you can, and doing it in more of these? And we see them entering into the GCC, yes, at varying degrees and in various degrees. In Malaysia, they've started actually doing the tokenized sukuk and what have you. So each country has its own story. But if Islamic finance and Islamic banking in general are unable to enter into a market that is becoming more efficient, of course, it has its own risks. Of course, going and venturing into that could actually damage the competitive advantage of higher growth that we've been seeing more than a decade ago, which is something that poses also an opportunity risk for the Islamic finance industry.
Final question for you, Bashar. What should we be watching? What are you watching over the next year in particular?
We're watching a lot of things, I have to say. So we rate more than 300 Islamic instruments. It's around 100. It's around 240 billion outstanding US dollar. Globally, with 60 institutions that are Islamic and Sharia compliant in various countries, in various sectors, in various currency. So there is a lot to watch. But the thing is, definitely what if I am looking, for example, on the credit profile, we're seeing how the geopolitical situation, I mean, as Fitch in general, impacting the various sectors, whether it's sovereigns, banks, financial institutions, corporates, projects, etc., whether in the region or outside, directly or indirectly. So that is something that we're watching very closely currently. But even beyond that, we're always, the ratings, I like to call them, and we like to call them as live. So our ratings is live by their nature.
Yeah.
Any development that has an impact on that is something that we're watching. So we're watching a lot of things. So it can go from the oil prices to the Fed fund rates to the inflation to the geopolitical. I can have a long list, and zooming in on each issue, where they will have their own credit story.
The headline we're considering today is this: ASEAN's Islamic finance industry has crossed the $1 trillion mark, which really highlights the region's growing role in global markets. Bashar Al-Latour is the Managing Director and Global Head of Islamic Finance at Fitch Ratings. Bashar, I've really enjoyed talking to you. Appreciate you spending the time today. Thank you.
Thank you very much for having me. Same here.
Good to have you on. Lots more business interviews, conversations coming very soon here on Mira Business FM. And don't forget, we stream 24/7 on YouTube, on TuneIn and Streamer. This is Mira Business FM.
Mira Business FM. The sound of success.